PNC Financial agrees to buy BBVA USA for $11.6 billion. And Italy's Nexi buys rival Nets in a $9.2 billion deal, creating a European payments giant. Lots of M&A to focus on this morning, and in general, the market's caught between the negativity of the most recent headlines, which of course keep coming and will keep coming as we go through the winter, but an ability to look through that and to focus instead on more optimistic times, better times perhaps, in the spring, in the summer, in the Northern Hemisphere of next year. That's where the market is right now, and so the market focused, yes, on the coronavirus story, but also on the vaccine, on the more positive commentary, perhaps on the lack of need for lockdown coming from the Biden team. Let's talk about where we are then on these European equity markets as they open up this morning, up by 0.4% on the Stock 600, the FTSE 100 up 0.7% or so, the IBEX up by 1.7%. And we've been talking about M&A, we've been talking about BBVA selling its US unit, and that was expected to be something that would push that particular stock up pretty strongly, plus lots of talk about other M&A in the Spanish banking sector. So we're focused on that. I don't have an opening price on BBVA itself just yet. So anything we're seeing on the IBEX at this point, driven by the M&A vibes that perhaps are spilling over from that story. I do see that Nexi is up by 3%. That's on the back of the deal that they've done to buy a Danish payments business Next. And elsewhere, some of the other stocks we were watching, Vodafone also trades to the upside. So let's get into a markets conversation. European markets opening higher with the IBEX leading gains. BBVA has made that announcement that it is selling part of its business, its US business, to a US player. Let's get into the markets conversation right now. I'm pleased to say we're joined by Shamik Dar from BNY Mellon, where he is chief economist. BNY Mellon Investment Management Chief Economist. Shamik, good to speak to you this morning. So when you look at, the equity market's going strongly this morning, it seems investors choosing to focus on prospects for vaccines, on trade deals in China, on better data out of China, rather than focusing on the challenge that still remains in dealing with coronavirus. Where is your thinking when you think about how the global economy charts a course through the winter and into better times ahead?
I think you've summarised it yourself quite nicely, Anna. I think that essentially markets look forward and they look through what's going on at the moment. We tend to focus on the here and now. And of course, there is quite a lot of bad news around at the moment. But actually, markets are thinking about what next year might look like. And of course, I think they're taking the view that if, vaccines come through pretty quickly, then the prospects for a recovery remain relatively good. And I think they look at places like China and parts of Asia as examples of what can happen once you do get on top of the virus.
And where do you see then the European economy, if we could start with that one, going through this winter, Shamik? Are you part of the contingent that would suggest a W-shaped pattern for the European economy would be the right thing to assume, with perhaps the second leg down a little shallower or much shallower than the first leg? What kind of imagery would you give us for the way that Europe is going to chart a course through the winter?
Yeah, I've been trying to get away from the alphabet soup, if you like, for a while. But yes, I think we will see a bit of a dip in the fourth quarter. I think the arithmetic of this is pretty straightforward. A month's worth of lockdown, which is what we're talking about in a lot of European countries, puts roughly a third of quarterly GDP at risk. Last time we were locked down, a number of European economies lost about a fifth of their economy. But this time around, I suspect for various reasons, it won't be as damaging. So let's say it's roughly half as damaging this time around as last time. So you multiply a half by a fifth by a third, you get a 30th, and that's about 3% of European GDP this quarter. So that's my starting point. What happens after that depends hugely on whether or not we have to extend lockdowns, et cetera, et cetera. Like I said earlier, I think the prospects for some kind of relatively strong recovery remain good so long as the good news about the vaccines continues to come through. So I suspect you might see Q1, but probably more like Q2, Q3, some relatively strong growth numbers, much as we did in the middle of this year.
Are you looking at, I'm looking at M&A with interest this morning, Shamik. We've had some deals in the banking sector, transatlantically, in the payments space. We have a European deal to talk about. I'm looking at the MA function on the Bloomberg, which tells me the size of deals this year versus last year. We're down by around 15% globally. And you would expect to see some hesitancy, some nervousness about doing big deals, I would assume, given what 2020 has thrown at everybody. That said, we do see a bit of a wave of deals coming through at this point. I wonder if the low interest rate environment, the lower for longer pledges that we get from central banks makes that less surprising. What would you expect to see on M&A?
Yeah, I think that's right. I mean, it's not really surprising, is it, that given the scale of the economic hit that we took back in the first half and going into the second half of the year, that investors were more cautious and more nervous about doing big deals. But given the scale of the market recovery since and what that implies both about future confidence about economic prospects, but also the interest rate environment, like you say, and also the potential for some really quite interesting deals out there. I think all of that's adding up to encouraging a number of people to get back into the market, into the M&A space. So yes, I'd expect that to pick up next year, and alongside fixed investment, but all contingent upon there being some kind of progress with the vaccine and economic recovery more generally.
Yeah, a number of investors have talked to me about a lack of confidence in investments, so certainly that's something to watch around the vaccine. Shamik, what do you make of China at this point? How much of a comfort is the data that we see coming out of China at this stage, given the weaknesses that more developed economies perhaps are dealing with? Of course, we've also seen just today the signing of RCEP, this big regional trade deal, including China and some other countries in the Asia Pacific. What is the story in China for you at this point?
So I think China is a potentially good news story, and to some degree underestimated, I think, by economists more generally. You hear a lot of bad news stories coming out from economists at the moment, and I don't want to underplay just how serious the situation we're in. But what I would say is that China, I think, demonstrates that if you can get on top of the disease, then the potential for upside is still quite, is large. If you shut down an economy, then in principle, at least, it's relatively easy to open it up again once you've got over the initial shock and the initial problem. And so the key issue is getting over that shock. Now, a lot of economists are taking a much more pessimistic view that we're going to end up with permanent damage to the economy, permanent scarring, mass unemployment, et cetera, et cetera. I've long been more skeptical about that. I'm not saying that's not possible, and clearly we do have to manage things carefully. But the best news, I think, about the Chinese example is that economically, at least, I won't say anything about the politics in this situation, but economically, I think it demonstrates to the rest of the world that it is possible to recover quite sharply and quite dramatically from what has been an enormous shock.
Shamik, thank you very much. Stay with us. Shamik Dar, BNY Mellon Investment Management Chief Economist. He stays with us and we'll get his thoughts on the UK. Very well positioned, of course, to give us thoughts on the UK. Coming up, Brexit talks enter another critical week with Boris Johnson in self-isolation once again, and Downing Street reeling from the departure of Boris Johnson's top advisor. This is Bloomberg. welcome back to the European Market Open. 11 minutes into a trading day that has European equity markets up around 0.8%. Straight to the Spanish banking sector for you, because BBVA's share prices opened up and substantially up as much as 20%, in fact, now up by 19.7% this morning. And just to give you some broader context as to what's happening here, the IBEX as a whole up by 2.4%, and that is not all BBVA. It is the fallout of that story. So BBVA selling its US operations to PNC, and as a result of that, there's a lot of speculation as to what exactly they're going to be doing with the money that they've raised. Could share buybacks be on the table? Could they do some further M&A within the Spanish banking sector? Sabadell is up by 12.8%. Now, to Brexit. Brexit talks are entering another critical week. Officials from both sides said the coming days will be pivotal as they seek to reach a deal that can be ratified and implemented before the December 31st deadline. But UK Chief Negotiator David Frost tweeted he will not be changing his position. Joining us now is David Merritt, our Senior Executive Editor. David, good morning to you. So this is Move Week. This has been dubbed Move Week by both sides, and yet it seems neither side wants to move. What do we know at this point then, David?
Yes, I'm getting very cautious about dubbing any day, particularly a crunch time, because, of course, we've been here, we've heard this sort of language before, but of course the timetable is getting incredibly tight now. If there's a chance to get some sort of deal that is ratified by both the EU and the British Parliament in time for December the 31st. But, right now, both sides still digging in their heels. They're both saying the other sides need to shift their position on these big sticking points we've been talking about for months now, fishing and this question about state aid. And still nobody is blinking. So we've had some reports behind the scenes that maybe the Europeans are prepared to shift their position on fish in exchange perhaps for something like access to energy markets, but we still don't have the details of that. Both sides still digging in their heels, saying we're running out of time, and yet neither of them willing to really make that big move as yet to actually get a deal done.
Yeah, and so in terms of timing, David, is the only deadline that really matters the 31st of December? It seems as if that's been the playbook for these conversations in the past.
Yes, that's right. I really am starting to think this may drag on a bit. I may be wrong, but it seems like, talks really could go on until 10 to midnight on New Year's Eve. We've seen enough EU negotiations and crunch summits, haven't we, to know that a deal only ultimately gets done when the real hard deadline is approaching and people have a gun to their head. So would there be a way to fudge things to get us up to the end of December so that goods and services can keep flowing across the borders to avoid any of the big economic disruption that the leaders on both sides of the channel really want to avoid? But still, not get that big deal inked in time. I think I'm afraid this may drag on for a few more weeks. Now, of course, big thing has changed the last few days. That is Dominic Cummings' departure from Downing Street. Does that change the calculations a little bit? Because one of the strongest advocates for a big break, more of a harder Brexit, he's now gone. Does that mean Mr. Johnson is preparing to shift ground a bit and to move into a slightly softer zone? We haven't had any sign of that yet, and we mentioned David Frost tweeting that he's holding the line, but that could be a development in the coming days.
David, thanks very much. David Merritt, our Senior Executive Editor. Thank you very much for that. Let's get back to Shamik Dar, BNY Mellon Chief Economist. And Shamik, you're so well placed to give us your thoughts on the UK story at this point. I mean, I know it's going back some years, but you've worked at the Bank of England, at the Treasury, at the Foreign and Commonwealth Office as well. Your sense of what is the urgency or lack of here in these talks, from an economist perspective, what sort of dates have you penciled in as being material?
Yeah, I mean, I think these are issues of substance as opposed to, sort of posturing, if you like, that are holding the two sides apart. I think it remains clear that the UK negotiating position is, I think, unlikely to change despite some of the events within Number 10 over the past few days. I think, again, having worked with David Frost in the past, I think you take his tweet seriously. He's a very serious negotiator, and my sense is that he probably wouldn't have stayed there if he felt he'd had to make a last-minute, quite dramatic turnaround. So my guess is the UK position is unlikely to change enormously. I guess one of the concerns is that some of these political developments prove a bit of a distraction and detract a little bit from the negotiations going on this week, especially if, for instance, it causes the European side to dig their heels in a bit longer. But I think David, your correspondent, got it absolutely right, that this is likely to drag on up until the last minute, because that is generally the way that these negotiations are conducted and ultimately concluded.
So this could go to the wire. Then, Shamik. What about how the Bank of England responds then? What are you penciling in? I mean, negative interest rates, clearly a big topic of conversation in the market, even if spokespeople for the bank have not been wholeheartedly in favour of going down that route. Would you see the Bank of England going in that direction? Perhaps if there is no deal on Brexit, could that be the deal breaker?
It's possible. Clearly a no-deal Brexit would cause some economic disruption, quite significant economic disruption for at least a quarter or so. Who knows after that? But certainly in the short run, it could be the catalyst for the bank to do something. My sense is that there's quite a lively debate going on within the MPC at the moment. Some of the, if you like, more academic types on the MPC are less in principle to negative interest rates than some others. But clearly, I think it still remains a last resort for the Bank of England. They will look to more traditional methods, such as there's still a little bit of room to cut interest rates from here, and there's of course QE to consider first. So my guess is that were there to be some relaxation, it would follow that route first, and negative interest rates later in the year if required.
And Shamik, we don't have to use the alphabet soup to describe the UK economy, but what is your expectation for the UK then? I know that in the past you've suggested that you're a little more like Andy Haldane, a bit more to the more optimistic side than some other economists.
Yeah, I think the first thing to say is it is massively uncertain. Everything I say about the world economy or the UK economy depends largely on what happens to the course of the disease, and we really don't know what's going to happen there. But I think what we have learned is that if you do get on top of the disease, then actually the potential for bounce back is a lot stronger than a lot of economists, a lot of general commentary would have you. I mean, the UK economy grew by about 15.5% in the third quarter. That still leaves it 8-9% below where it was pre-crisis, but you'd only need another quarter like that to get us back to pre-crisis levels of activity. So, I remain relatively optimistic that if we do get on top of the disease, if the vaccines come through, then at some point around about the middle of the year, probably towards the second half, maybe the beginning of the second half of the year, we get back to something like pre-crisis levels of activity. Everything depends on the course of the disease from here, though.
Shamik, thanks so much for your time. Shamik Dar, BNY Mellon Investment Management Chief Economist. Shamik will be continuing his conversation with us on Bloomberg Radio at 9 a.m. at UK time. Caroline Hepker and I will be presenting that hour of the programme, so we will have the pleasure of speaking to Shamik then. Coming up on the programme, BBVA, as we've been saying, sells its US unit to PNC Financial. The deal will create America's largest regional bank. The BBVA share price reaction quite stunning this morning, was up by as much as 20%, now up by just shy of 15%. We'll talk about M&A next. This is Bloomberg.
most countries have been growing on consumer spending domestically. Now, the second wave that's passing through Europe and the US will probably crimp some of that. But travel is certainly challenged. And in our case, we get two other tailwinds. One is that everything's going digital. So, people who were using cash earlier are now using some form of a contactless card or e-commerce online, all of which helps run through our rails.
That was the MasterCard CEO, Ajay Banga, talking about payments going digital. Let's stick with that theme and bring in an M&A story this morning. Italian payments processor Nexi has agreed to buy private equity-owned rival Nets in a 2.8 billion euro deal. The move will create one of Europe's biggest payment providers. Our financial M&A reporter, Jan-Henrik Forster, joins us now with more. Jan-Patrick, good to speak to you this morning. What are the details then of this Nexi Nets deal?
Well, it's an interesting story, and it has been well documented over the past weeks on our very own network and also in the press, and the Italian press. So this is one. So Nets basically is a payments provider, very strong in the Nordics and also the German-speaking regions, and it was private equity owned, and probably one of the last remaining payment assets in Europe that was up for sale. And then there's Nexi on the other hand. Just a few years ago, it was a small Italian payments provider and has been growing almost exclusively through M&A. Like now it's kind of, after this acquisition has been done, it will be probably a 20 billion company. And basically the biggest payments firm in Europe by transaction volume. So payments is a scale game. So there has been M&A for the past years. It's a global theme. And Nexi probably is one of the winners of that trend. Just a few weeks ago, it also bought SIA, which was a local competitor, partly government-owned. The government is still invested. But that was already a blockbuster deal. So Nexi alone just did, deals worth more than 10 billion just this year and has been growing almost exclusively through M&A. It's an interesting story because these companies need scale, right? You have one platform, more transactions over your platform, so you increase the share of basis points you grab from those transactions, and that's the entire story of the payments industry.
Yeah, certainly. It's certainly a sector we're watching them for M&A. Jan-Henrik, I'm sorry, I think I might have said your name wrong earlier on, Jan-Henrik. Thank you so much for giving us your thoughts on Nexi. Let's get on to the Spanish banking sector. BBVA, very much in focus. What do we know about what BBVA wants to do with the money it's getting here? Because that seems to be something that has caused some excitement in the Spanish banking sector.
Indeed, and I think that's a great question. I think it could be a precursor for more M&A, no doubt. I mean, first of all, PNC used the cash proceeds from its BlackRock stake disposal to do this deal. Banking consolidation is also in full swing in the US. They need to increase scale. COVID is putting a lot of pressure on banks, and also in the US, you are back in negative or at least zero rate territory. For BBVA, it could do two things, and I don't want to speculate too much, but obviously domestic consolidation in Spain is a big theme, right? So if you think about how they could, use this money, they could do something locally. We know that Sabadell, for instance, is exploring strategic options. There has been, chatter around BBVA and Santander. This is just, purely me guessing, but, you can create synergies with these deals, and there's pressure on European banks. And I also think that it will put more pressure on other European banks. After this deal has been done, other banks have big, other European banks have big U.S. operations which are underperforming. Yeah. And, you think about those lines.
Okay, thanks so much, Jan-Henrik. Thank you very much for joining us. Really good to speak to you. Certainly watch the share price of Sabadell, and you can see that people are thinking about M&A in the broader banking sector. It's been a theme for a while. Up next, Sweden introduces a curfew for establishments that serve alcohol. We will talk about where the Swedish economy goes next. This is Bloomberg. Welcome back to the European Market Open. 30 minutes into your trading session for this Monday morning, and European equity markets off to a flying start. We've got M&A to talk about here in Europe, as well as a trade deal signed in China, some Chinese data, all of that offering some support for the Asian equity session and into the European session, even when we look at fairly gloomy headlines, ongoing gloom, of course, around coronavirus. Will that be a feature of the winter that markets are just deciding to look through? The Spanish banking story certainly very much at the heart of things as well. I pulled up the IBEX, and I can see there's only 5 stocks in negative territory on the IBEX, such as the enthusiasm for banking M&A in this morning's session after we saw BBVA sell its US operations to PNC. So BBVA goes up by 16.5%. What will they do with that money? Well, Sabadell is up by 12.6%. I can also see Santander up 4.6%, Bank Inter up 3.9%. So across the banking sector, Bankia, CaixaBank also move higher. We are seeing some excitement around M&A, it would seem, for the banking sector in Spain. Let's go to Bloomberg First Word News Update. Here are the top stories that we're covering for you at Bloomberg this morning. President Trump is reportedly planning a new crackdown on China in his final weeks in the White House. According to Axios, he may announce new sanctions or restrictions against Chinese companies or officials. The move would be to prevent Joe Biden from changing course on China. UK Prime Minister Boris Johnson is self-isolating after coming into contact with an MP who tested positive for COVID-19. Johnson says he has no symptoms and will continue working remotely. Back in April, COVID-19 put the Prime Minister in intensive care as the UK struggled through the first wave of the pandemic. Austria is locking down for 3 weeks as softer measures fail to slow the pandemic. It will close schools and most shops starting on Tuesday. It comes just 2 weeks after a partial lockdown was imposed, leaving large parts of the economy open. Chancellor Sebastian Kurz says he hopes these new restrictions can end on December the 6th. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Sweden is introducing a 10:30 p.m. curfew from Friday for all businesses serving alcohol. It's the first time since the pandemic started that the country is enforcing this kind of lockdown. But daily cases have hit a record and hospitals are seeing a rising influx of patients. Joining us now is Johan Torgeby, the SEB CEO. Johan, really good to speak to you to get the banking perspective on the Swedish story, the Swedish path through the virus. Clearly, Sweden did take measures back in the spring, even if they didn't look like some of the lockdown measures we saw elsewhere. When you look back on most of 2020 as we're so far through it, what impact has the pandemic had on your bank?
I think one need to divide between the health concerns in the global economy and the economic performance. And it has clearly been so that we can now trace that the first wave's response in Sweden seemed to have led to a milder recession than the other 19 countries where we operate. On the health concern, I think the jury is still out. It's heavily debated if it's the right or the wrong strategy. I think only history will tell. But it looks like the first wave response was a milder effect in Sweden. Right now, everyone is mostly concerned about what will the national response be to the second wave, and will this continue?
Right. And so when you think about that, Johan, what are you expecting to see for the Swedish economy and indeed for the other economies that you operate in Germany and the Baltics, when you think about lockdown measures being reintroduced in some parts of Europe?
Now, I think if we have a slight sigh of relief from the effect from the first, I think we have an increasing concern of the effect of the second. There's no lack of positive voices out there thinking that a second lockdown will be much milder, hence a lesser of an economic effect. However, we can't afford to guess, so we have made what we deem to be prudent reservations for next year in 2022. Normalization will not come now. I think we will see the fiscal policy programs and their longevity before we make such a call. Monetary policy looks to be very stimulative and here to stay, but there is a question mark in wherever we operate, where will the fiscal stimulus be in 6 to 12 months?
What are you seeing in terms of businesses' willingness to invest at this point, Johan? I was talking to the CEO of Allianz just last week, the German insurance business, and he was suggesting that CEOs, businesses are being put off investment, of course, because of the high levels of uncertainty. Where do you see that playing out?
No, I would probably echo that. I think there are three phases in any kind of crisis which is hard to navigate. First is the very defensive stage. We saw that in April, March. Everyone borrowed a lot of money, not necessarily because they knew they needed it, but as insurance for a rainy day. Then you have the transition period, which I think we are in right now. It's where you gauge your new confidence. Do you have enough confidence to move in a strategic way, including organic investments? We have seen an uptick in dialogue around consolidation across the board, which is of course giving us a sign that confidence is returning right now, but we don't see a investment-led credit expansion as of yet.
And what about investment banking, how that performs, Johan? You've expressed some concerns around how resilient investment banking can be at this point. I mean, just today, though, we've seen a number of deals in the financial services sector. We see Nexi buying Nets, not a million miles away from where you are in Denmark. We've seen Nordnet announcing that it is going to go public, that in financial services as well. So where are your concerns around the investment banking part of the business coming from?
I think the small cap medium-sized company investment banking business has performed remarkably well during the whole last 9 months of increased turbulence. But we have seen a lack of execution when it comes to large-scale IPOs and large-scale M&A. I would say those are now being normalized to a level that we saw before COVID broke, which was a very elevated and very positive level. When it comes to the IPOs that we are now seeing, they have been in the making for some time. And there are also many companies that are implicitly or directly benefiting from a more online business models. And I think they do the right thing in capturing that momentum, because that acceleration has been very clear. Consolidation in the banking industry, I hear a lot. I see a lot like you guys. You've reported and mentioned a few of them. And of course, the Nets one is very close to home. I don't see a lot here in the Nordic except for the announced sale of a portion of their stake that Sampo has in Nordea.
It seems we may have a few problems with our line to Johan. I am certainly not hearing him anymore, and perhaps that means that you are not also hearing him. So if you could hear me, Johan, thank you very much for your time. I'm sorry to bring our conversation to a premature end. Johan Torgeby, the SEB CEO. Really interesting to get his thoughts, though, on M&A and where we will and where we won't see further along that trend as we go through the winter. Coming up on the programme, President Donald Trump is still refusing to concede the election. You'll get the latest on the United States election process next. This is Bloomberg. Welcome back to the European Market Open. We are some 40 minutes into Europe's trading session this Monday morning, up by 0.7%. The Stock 600, that is, up by 0.7%. The banking sector doing very well. The IBEX up by 1.8%. Very few stocks in Spain actually move to the downside, as BBVA is up by 15%. Other banks, including Sabadell, move higher on the prospect of further M&A within the sector. Let's get a Bloomberg Business Flash for you. Some of the biggest corporate stories that we're covering here at Bloomberg. PNC Financial has agreed to buy BBVA's US operations for $11.6 billion. The deal would make it the nation's largest regional bank. It comes as smaller lenders are looking to scale up as behemoths JP Morgan and Bank of America move into new states and sectors. The Italian payments provider Nexi is buying rival Nets for $9.2 billion. It's Nexi's second acquisition in as many months, expanding its reach across the continent. It adds to a wave of consolidation in the industry. The two firms see the deal generating about 170 million euros of synergies a year. The world's biggest oil company is set to return to the bond markets for the first time since last April. Saudi Aramco is looking to fund its $75 billion dividend commitment after weak oil prices left it without the funds to cover the payout. It's hired banks including Goldman Sachs for the sale. That is your Bloomberg Business Flash. Let's return to the subject of US politics. President Donald Trump is still refusing to concede the US election. He tweeted overnight, "I concede nothing," after speculation he'd admitted defeat in an earlier tweet. Meanwhile, Axios is reporting that Trump plans several new hardline moves against China in the remaining weeks of his term. Joining us now is Bloomberg senior international editor Jody Schneider. I say he tweeted overnight. He was tweeting overnight. He'd been tweeting at the weekend. Give us an overview of President Trump's latest tweets then, Jody. What is he communicating?
Well, he's basically communicating, Anna, that he is not going to concede, or at least not anytime soon. Tomorrow will be 2 weeks since Election Day, and it's been more than a week now since Joe Biden was put over the top in terms of the Electoral College with Pennsylvania. So the current President Trump, has had a fair bit of time to digest this, and some allies were saying that his earlier tweet, the one where he seemed to refer to perhaps a new occupant of the White House come January, but then he walked away from that he said, "No, I concede nothing." So at this point, he is still saying that he won on Twitter, and he's also continuing to try to legally fight this as well, although those legal challenges are not going particularly well. The problem with all this is that Joe Biden and his team can't really start the transition until the current administration allows that to happen.
Right, and so that's why that's one of the reasons we focus in on this, of course, Jody. What is the latest then on President Trump's election lawsuits? Because from that perspective, it seemed over the weekend that perhaps his challenge, President Trump's challenge to the election results, seemed to be becoming less convincing. What are we hearing about these lawsuits?
That's right. There's a much more narrow kind of path for these challenges. You might recall after Election Day, in that speech he gave in the middle of the night, Washington time, President Trump said he was going to the Supreme Court. Well, these cases are getting nowhere near the Supreme Court. They're basically being thrown out at a lower level. These are cases of alleged fraud and improper vote counting, and they've largely been thrown out. There was one that the campaign walked away from over the weekend in Arizona about improper voting machine tallying, and even they conceded that wasn't going anywhere, and Joe Biden has now been declared the winner in Arizona as well. So they're really not prospering too much with these lawsuits. There will be a recount in some counties in Georgia where it was very close, but that won't really matter to the final tally, with Pennsylvania, of course, having put Joe Biden over the top.
Jody, thanks so much. Jody Schneider with us there with the latest on the US election. 2 weeks, as she said, tomorrow. since the election took place. A quick line on M&A as we get into our next conversation. Christian Saving, Deutsche Bank's Christian Saving, talking about M&A at a finance that is taking place in Germany. I think cross-border M&A is not attractive if there is no banking union, and this perhaps a message to regulators. It's an interesting one, which Matt and I have talked about a number of times. What stands in the way of cross-border M&A? Is it the regulators? Is it a lack of appetite from the CEOs themselves? And perhaps it's the lack of banking union in the case of Deutsche Bank. Our financial M&A reporter, Jan-Henrik Forster, joins us now. And this will be something that interests you, Jan-Henrik. But let's get to the BBVA story this morning, because this is really moving markets. PNC Financial has agreed to buy BBVA's US unit. What more do we know about this?
I mean, I think there are various trends at play at the moment, right? So first of all, there's banking consolidation, and that is happening globally. In the US, it's mainly focusing on regional lenders. We saw some big deals last year with BB&T and SunTrust. You know, that was one of the biggest banking deals in over a decade. And obviously, there's consolidation in Europe, right? It has been picking up. Banks under pressure from low rates, lots of regulatory costs. And so far, you know, banking M&A has been focusing on domestic consolidation, right? And Spain was one of the markets which has been consolidating. So you saw the Bankia CaixaBank deal, as well as, you know, smaller M&A deals in the regional space, Liberbank, Unicaja. And now, you know, BBVA is creating a lot of optionality with this disposal in the US. You know, with $10 billion, you can do a lot in terms of M&A, but also, you know, you can buy back shares. You can pay out a dividend. Obviously, you need some capital at the moment, you know, for COVID uncertainty. But, you know, this is now creating a lot of strategic optionality for BBVA. And it also plays into this theme of banking consolidation, you know. I think this will put other lenders under pressure to basically move faster.
Okay, so this is interesting. I mean, Christian Saving talking about cross-border M&A not being attractive if there's no banking union. And, of course, that puts domestic M&A within Spain, for example, very much more at the centre of things, because you don't need banking union to make sense of that. So where are we expecting to see the Spanish banking story really kick off then, Jan-Henrik?
I mean, it has been kicking off this year, right? We saw two significant deals. I'm not sure when CEOs say cross-border M&A, you know, it needs a banking union. Sometimes I feel it's like an excuse. Obviously, these deals can be very complicated. You may need additional capital buffers. You can't move liquidity across borders. But then, you know, if you want to do an offensive move, right, if you want to do something that, you know, changes the European landscape, if you're serious about creating a true European champion that can compete with US banks, then you would do something cross-border. And I think that the ECB is very aware of all these issues, and, you know, regulation will follow at some point. With regard to domestic consolidation, obviously synergies are much higher, and these deals are less complex. Often these banks are retail banks. If you look at BBVA now, they could even think about a merger with Santander. They would, I mean, both banks are not the largest in Spain, so they would take market share back. So that's obviously one possibility. Another deal I see is BBVA buying Sabadell, and, you know, they would have plenty of cash now to facilitate such a transaction. Obviously, COVID is an uncertainty. You know, Sabadell is very focused on loans to small and medium-sized enterprises, and, you know, these have been hit very hard. So you have no visibility on the evolution of the balance sheet. But all these deals are likely now, and, you know, with 10 billion of cash from such a transaction, you can basically sit down wherever you want to.
Jan-Henrik, thank you very much. Jan-Henrik Forster joining us there to talk about M&A, and we continue to keep across these lines from Christian Saving, speaking at Euro Finance Week. Up next, how far will bonds price vaccine optimism? A lot of talk about whether we can sustainably get that 10-year yield above 1%. We'll talk to Market Live's Christine Aquino next. This is Bloomberg. Welcome back to the European Market Open. 52 minutes into your trading session. European equity markets really flying, partly due to the M&A story, up by 0.4% this morning. So I take that back. Not really flying, but certainly moving to the upside. The banking sector is doing very well. Perhaps we could say that's flying, up by more than 2% in the banking sector for Europe. That is by far and away the biggest gaining sector this morning. Basic resources not doing too badly. And travel and leisure also in there. So it is a day where we are buying up cheaper stocks. We're buying value. We're buying some of the more cyclical. We don't see much appetite for healthcare at this point. Joining us now is Christine Aquino, who leads our Markets Live team in Europe. And M&A in the banking sector, Christine, is something of a perennial theme. And within Spain, that seems to be something that's captured the market's attention. Today, we see not only M&A being done or assets being sold, but piles of cash being built up to do further deals. That would seem to be part of the story.
Yeah, absolutely, Anna. I think the consolidation theme has certainly been big in the European banking sector, particularly some of those more banks that have been more on the back foot, including Italian and Spanish banks, of course. And yeah, it really speaks to, the story of this year where we got a battering in the sector, and now investors are questioning, which are going to be the strongest ones that will survive, essentially, and will give investors that shareholder value that they're looking for, especially in a space that's been really crimped by various factors such as negative or near zero rates and the fact that dividends have been postponed in both the UK and Europe. A lot of factors hurting the sector this year, and so investors are really looking for the banks that will stand out and will give them value moving forward.
And what do we make of movements in the bond markets then, Christine? I know the Markets Live team have been asking how far will bonds price vaccine optimism. 87 basis points is where we trade on the US 10-year. A lot of talk about whether we can get that over 1%. Perhaps that would require a very risk-on environment. The thing is, we do see quite a risk-on environment today, even though virus news continues to be negative, which is an interesting thought.
Yeah, absolutely. And I think when it comes to bond markets, there really is that tension between vaccine optimism and virus realities. I mean, looking back to last week's price action, we really see those yields power higher after we saw the Pfizer news come through. And now we're looking for a readout from other vaccine trials, specifically the Moderna one. And really, it's going to be interesting to see whether that will create the same upward momentum for bond yields as it did the Pfizer news. Also, the question of longevity, of course, because we saw those moves after the Pfizer news fading towards the end of last week. So the question is there going to be enough from the Moderna readout to sustain yields this time around?
Thanks very much, Christine Aquino, who leads our Markets Live team. Thank you very much for joining us. 8:56 here in London. We've got a lot of movement in the banking sector. We were talking about that with Christine. The IBEX up by 1.3%. The banking sector, the biggest gaining sector here in Europe today. That's on the back of M&A speculation in Spain and asset sales in Spain or from Spain to the US. So BBVA selling that US business to PNC. That has led people to ask what they want to do with that money. And as a result, we see Sabadell's share price, that's just one example of a banking company in Spain moving to the upside, but Sabadell's share price up by 9.6%. A lot of focus on M&A. Christian Savings still speaking at that conference, saying that has been talking about M&A and the blockers to it. He has gone on to say he does not see M&A in the next 12 months, which is interesting from Deutsche Bank, a business that many people ask whether it's going to be part of some kind of M&A story. That is it for the European Market Open. Surveillance is next. This is Bloomberg.
Balancing act risks. Well, President-elect Biden's team suggests a national lockdown isn't on the agenda. Virus cases in the U.S. surpass 11 million, but global stocks continue to gain. Trump's last stand, the president comes close to admitting he lost, but walks back at talk of a concession. On Twitter, there's reports the plan's fresh hard line moves against Beijing in the final weeks of his term. And best laid plans, Brexit talks with the EU enter another crucial week, but the UK Prime Minister is isolating after coming into contact with a lawmaker who tested positive for coronavirus. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London, West London, in fact. Now, this is a picture on the markets. A lot of the focus, of course, is on the number of infected, but a lot of the focus is also on what policymakers can do going forward. So let's quickly get onto the data to give you a sense of what's moving. A lot of the focus will be on some of the things that we saw, for example, in bonds. European stocks, though, following Asian shares and U.S. futures higher, buoyed by positive sentiment on trade, also signs of opposition to a national American lockdown, the dollar's falling, and then the other thing I'm looking at is oil pushing higher, treasuries actually edging up. The focus, of course, is on the sustainability of the economic recovery persisting amid a flare-up in virus cases around the world, and then we're also hoping and expecting news for more vaccines coming up that could be positive after what we heard from Pfizer last week. Now, we'll have plenty more on the markets throughout the program, but now let's get straight to the Bloomberg First Word News in London is also Leanne Gerrans. Hi, Leanne.
Good morning, Francine. President Donald Trump is still refusing to concede the election. Yesterday, the president tweeted that Joe Biden won because the election was rigged, a claim flagged by Twitter. Later, en route to playing golf, he walked back the comments, tweeting, "I concede nothing. We have a long way to go." Meanwhile, UK Prime Minister Boris Johnson is self-isolating after coming into contact with an MP who tested positive for COVID-19. Johnson says he has no symptoms and will continue working remotely. Back in April, COVID-19 put the Prime Minister in intensive care as the UK struggled through the first wave of the pandemic. Austria is locking down for 3 weeks as softer measures fail to slow the pandemic. It will close schools and most shops starting on Tuesday. It comes just 2 weeks after a partial lockdown was imposed, leaving large parts of the economy open. Chancellor Sebastian Kurz says he hopes new restrictions can end on the 6th of December. And finally, in sport, Dustin Johnson made history while winning his first Masters tournament. The world's top-ranked golfer shot a record 20 under par to win by 5 shots. It was the largest margin of victory at the Masters in a whopping 23 years. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, global stocks are climbing towards records. That's as fresh vaccine reports are on the horizon. Drug makers, including Pfizer, are expected to obtain more trial data as early as this week. Well, joining us now is Christian Nolting. He's Chief Investment Officer and Head of Investment Solutions at Deutsche Bank International Private Bank. Christian, as always, thank you for joining us. When you look at what the markets are pricing in, is it more news of a vaccine or just the fact that the U.S. may not go into lockdown? Christian, I don't know if you can hear me. I think we may have a couple of technical difficulties. These things happen. Maybe on a Monday morning, it takes a little while longer for our machines to get up and working and satellites and things like that. Let me do a quick data check and then we'll try and reestablish connection as we stay in the industry with Christian Nolting of Deutsche Bank. Now, a lot of the focus, of course, is what we heard from Pfizer last week, and there definitely seems to be a bit of momentum on the markets. That we could see some more positive trial data out of some of the Pfizer rivals. I know we speak to, of course, industry participants, and they don't want to be compared as rivals, but maybe some of the Pfizer peers. Still, there is a lot of concern about the sustainability of the economic recovery persistent amid this flare-up in virus cases. If you look at the numbers in the U.S., it's pretty incredible. If you look at the numbers in the UK, they're also pretty big. Let me try and reestablish connection with Christian Nolting from Deutsche Bank International Private Bank. Christian, I don't know if you can hear me this time. Happy Monday to you.
Good morning, Francine. How are you?
Wonderful. Christian, you can hear me. I can hear you. It's half the job done. What do markets look at from now until the end of the year?
Well, I think it's on the one hand, lockdowns, how long would that take? Is it going to take longer, which is my view? On the other hand, I think in the next 2, 3, 4 weeks, we'll probably get more news about additional vaccines and the way how they are distributed, which I think would rather be positive news. And then, of course, there's an aspect to the US elections and handover of presidency. I think that's very important what we see in the Electoral College in December, but also then the Senate elections in Georgia on January 5 would be very important as well. So I think that's the key points for markets to look at in the next weeks and probably till year end.
But Christian, does it make you nervous that actually the markets are higher, but the number of infected, the number of deaths around the world is rising still quite rapidly? Is there, too much hope on the future priced in the markets and not enough of what's happening here and now?
But of course, I think it makes you personally nervous that infections are rising globally, right? So everyone needs to take care of that, of course. The markets try to look through that because I think the attitude is that if there is more lockdowns, you would also get more fiscal help, more monetary help, and that's clearly what central banks have been saying. And same will happen on the political side. So it's a bit weighing in the balance. Is it really only the infections or is there support coming? And I think for the time being, we think there's support coming. It's tough to imagine really that central banks or politicians would withdraw from the policy at that point in time.
Christian, what gets priced into bonds from now? Again, is it just more furloughs and more monetary easing? Or is there a concern that we could see inflation quicker than expected if we do have a vaccine?
Well, I think what was quite interesting to see was when we saw the results of the US elections, right? First it looked like Trump would win. Then you see that really change in interest rates to the upside. And then with a pure Biden win, there could also be upside because there would be a massive fiscal pack and that would mean higher rates. We have not seen that. It's a bit of the best of two worlds with the Senate probably being Republican and Biden president. So from that perspective, we saw yields not moving massively higher. And our view is that, say, over the next 1 year's time, you will see still a kind of yield curve control by the central banks because the short end is very low. And on the longer end, there will be a lot of bond buying happening from all central banks around the world. So call it yield curve control, although it's sometimes not explicitly mentioned. From that perspective, we don't see a massive move. Longer term, though, I think we have seen with that crisis savings rate very high and consumers coming back, hopefully, once the vaccine is there, they travel more, they spend more money, and there probably will be some additional taxes coming up, and that's an upside for inflation. I don't think there will be massive upside for inflation, but it's not that we end up in a Japanification, and we think inflation is slightly higher next year, and then again higher for 2022, but not a massive inflation run, I would say, but you can see that in inflation expectations already now, so that's what we think is going to be happening, which, by the way, is quite positive for equities again, and for gold, by the way, from our point of view.
Christian, what's your take on some of the technology stocks? So I'm working from home, you're working from home, we're using all this great technology, but is it going to be regulated?
Well, there was also some concern that the Biden government would be much quicker in this. I think there will be more regulation. There could be also some tax coming up, but I think it will be slow and will be discussed. So I don't expect any quick move on this. I think if you look what the markets are doing, I think it's too early for the so-called reopening trade where you would massively go into cyclicals. So I think there's still room for technology. But in 2021, I think there will be a point in time where you say, okay, the valuations are very high in technology and the growth rate we have seen this year is not coming back. So it cannot always be repeated what we have seen this year. And from that point of view, I would say maybe in the first quarter of next year, you need to switch more, not only into value because of the low interest rates. It's not only value, it's more cyclicals from our point of view.
Christian, thank you so much. Christian Nolting there from Deutsche Bank, International Private Bank, stays with us. So now up next, President Trump comes close to a concession before walking it back and saying he concedes nothing. We'll get the latest on U.S. politics next, and this is Bloomberg.
is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Donald Trump's Twitter feed doesn't make Joe Biden president or not president. The American people did that. What we really want to see this week, Chuck, is the General Services Administration issue that ascertainment so we can start to do the kinds of things you and I talked about a few minutes ago. Meet with these vaccine officials, kind of get the intelligence briefings for the president-elect, the vice president-elect.
Well, that was Ron Klain, President-elect Biden's chief of staff, speaking yesterday. Now, President Donald Trump is still refusing to concede the election. Yesterday, the president tweeted that Biden won because the election was rigged, a claim flagged by Twitter. Later, en route to playing golf, he walked back the comments, tweeting, "I concede nothing." Meanwhile, Axios is also reporting that President Trump plans several new hardline moves against China in the remaining week of his term. Well, joining us for perspective on what we're seeing in the U.S. is our senior writer, Stephanie Baker, who's been following the Trump administration from the very beginning. Stephanie, thank you for joining us this Monday morning. How do, from the outside world, it's just pretty incredible what's happening in the U.S. What will happen in the next couple of weeks? Does the president finally concede, or are we expecting officials and, more legal challenges to be involved?
It looks like Trump will not concede, or at least not in the way that we have become accustomed to. I don't think that means he won't actually leave office or leave the White House. I think he will continue to pursue these legal challenges. So far, every legal challenge he has mounted has lost in court because they just don't have evidence. I lost count of the number of legal challenges that they've lodged. I think it's 9 by my latest count. So I think, legally, I don't see it going anywhere. But I think this is a strategy and a message he's going to be hammering for the next 4 years. I mean, I think the expectation is that he may announce something that is, short of a concession, but also at the same time announcing a potential run in 2024, and that he will be pushing this narrative that the election has been stolen from him, stoking support amongst his 70-plus million supporters as a way to continue to, be the kingmaker of the Republican Party over the next few years. And I think it is a dangerous game. You're seeing increasing numbers of Republicans come out and at least demand that President-elect Biden be given briefings, security briefings. John Bolton over the weekend, the former national security advisor, said so. So, I mean, there are some cracks appearing in the Republican Party in terms of, the way, the level of support that they're providing to him. But this is a real dangerous game.
Stephanie, will the Republican Party have him in 2024? And if you look at the months ahead from now until December or until January 20th, how much, policy can President Trump actually do, especially with China?
Well, I mean, he's done 2 things. I think the most significant move so far is removing the Secretary of Defense, Esper, and installing political loyalists at the Defense Department. And I think that's what has many people worried about what steps he might take. For instance, an accelerated withdrawal of troops from Afghanistan before all the conditions are right or before the military believes the time is right to do so. Potentially hobbling a Biden administration, setting up a situation where, they're very hemmed in as to what they can do. And again, we had this report over the weekend from Axios saying that Trump planned several measures on China, cracking down, perhaps banning additional companies, putting additional companies on the ban list for U.S. companies to do business with, cracking down on its labor policies, and really hemming in the incoming Biden administration as to what they can do on China. Now, however, Biden and Trump take a similarly tough position on China. Perhaps their methodology and their approach to China is different, but I think they both view China with similarly, tough terms. So that remains to be seen exactly what he will do and, what kind of effect it would have on a Biden administration.
Stephanie, thank you so much. Our senior writer there, Stephanie Baker, following U.S. politics for us now. Still with us is also Christian Nolting. He's a Deutsche Bank International private bank strategist. Christian, thank you for sticking around. When you look at some of the dynamics between the U.S. and China, again, how should the markets price in? I think you were telling me that you like to gold. Is that a haven, or do you use it as another, way of looking at the markets?
Well, gold I like, especially because I do see inflation slightly moving up and still a lot of stimulus around the world. So I think that's the key point for gold. Also, we don't expect a massive strength in the US dollar, which would be counterproductive for gold. So I think that's three issues we have with gold, the positive ones. If you look US-China, I think, as Stephanie rightly said, the policy from my point of view will not change massively. I think the way to deal with each other might change, but the policy in general will be quite strict. And I think that's something markets have priced in. I've not seen comments that we do expect a massive change in China policy. And if you look at the election campaigns in the US during the campaign, then there was no one saying we will be more relaxed to China. On the other hand, now you've seen also the new formation of this large trade pool you see in Asia, RCEP. And with that, of course, there's also competition between the US, the EU, and this new area, or combined area, I would say. Nevertheless, I think there will be discussions. I think the better news probably is that I don't expect Biden to put additional tariffs on Europe. And that was always weighing on the markets a little bit. So that could be removed, but we need to see how the negotiations really work.
Christian, there's also this big Asian trade pact that actually was announced yesterday. Are Asian countries and China the big winners for 2020? How do you play the Chinese economy?
Well, first of all, look what China just came out also with numbers. I think the recovery is happening there. It looks quite okay how they can deal with the virus. Still, they need the rest of the world also to be open to do their trade for their exports and imports. So to be at full speed, you need an open global world, obviously. On the other hand, what they are building now in Asia, I think that's very positive. They massively bring down tariffs within that area. It's interesting to see that India has not joined so far, but it's as far as I read the outcoming document, India is still open to join, and that would really be then the largest trade union you can see globally. And that's something which is very positive. If you think when China joined the WTO, it took some time, but then also positivity was there. So I think the more you get on trade, you easier can trade. That should be seen as a positive by markets quite clearly.
Thank you so much, Christian Nolting there, Chief Investment Officer and Head of Investment Solutions at Deutsche Bank International Private Bank. Now we'll have plenty more, of course, on the markets coming up. We also speak to the former Bank of England Governor, Mervyn King. That's in around 1 hour from now. We'll ask him about inflation. We'll ask him about scarring in the economy. This is Bloomberg.
get the overwhelming majority of people taking the vaccine, and you have on the one hand an effective vaccine, on the other hand a high degree of uptake of the vaccine, we could start getting things back to relative normal as we get into the second and third quarter of the year, where people can start thinking about doing things that were too dangerous just months ago.
That was Dr. Anthony Fauci speaking yesterday. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Italian payments provider Nexi is buying rival nets for $9.2 billion. It's Nexi's second acquisition in as many months, expanding its reach across the continent. It adds to a wave of consolidation in the industry. The two firms see the deal generating about 170 million euros of synergies a year. PNC Financial has agreed to buy BBVA's U.S. operations for $11.6 billion. The deal would make it the nation's largest regional bank. It comes as smaller lenders are looking to scale up as giants JP Morgan and Bank of America move into new states and sectors. And the world's biggest oil company is set to return to the bond markets for the first time since last April. Saudi Aramco is looking to fund its $75 billion dividend commitment after weak oil prices left it without funds to cover the payout. It's hired banks including Goldman Sachs for the sale. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Let's get straight to the markets. The market is focusing on some of the positives that we're seeing out there, including the world economy, really sustaining its engine despite the number of infections rising across the world. Now, this is the data. I'm looking at European stocks. They're rising. I'm also looking at euro dollar. And if you look at some of the other things that we should be watching out for. So we know that Boris Johnson is isolating after he came in contact with a person that then subsequently tested positive for the virus. And then Asian nations also signed this massive trade pact. That's giving a little bit of good momentum filtering through to Asia. The dollar is retreating, but if you see it, global stocks are definitely climbing towards a record. And we also had Joe Biden's virus advisors saying that a lockdown is not on the agenda. Coming up with fresh vaccine reports on the horizon, perhaps as early as this week, we'll round up the latest coronavirus reports. We'll look at the number of infected. We'll also look at whether people will actually take the vaccine and whether it's 1 dose, 2 dose, or multiple doses. This is Bloomberg. day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
As the global economy shifts from high carbon to green, governments are looking for ways to make a just transition which leaves no one behind. This is a monumental challenge with diverse issues. Countries like France, the United States, Poland, and Saudi Arabia have gross domestic products linked differently to emissions, meaning they face different challenges to reach net zero. Countries like Poland get 75% of their power from coal, an industry employing 110,000 people. 2/3 of Saudi Arabia's state revenue is generated from the oil industry, and 2/3 of all Saudi workers are employed in the public sector. There are 400,000 auto jobs at risk in Germany as the industry moves to electric vehicles. Despite the potential economic and political fallout of this transition, countries agree it needs to happen. The Intergovernmental Panel on Climate Change in 2018 outlined the steep decline needed to reach carbon dioxide net zero in 2055 or even 2040. But there is hope and a way to do this fairly. Places like the UK have shown increased growth while decreasing their coal consumption. An important step is driving down the cost of new technologies and creating jobs in new industries as a result. Renewables are getting cheaper and costs are expected to decline. There are now just over 10,000 jobs in the offshore wind industry in the UK, in former industrial and manufacturing hubs, and the industry expects this number to more than triple over the coming decade. Other countries are finding their own successful formulas. India, for example, has some of the cheapest solar electricity in the world and is creating 100,000 jobs in renewable energy whilst increasing the competitiveness of its economy. When politics, policy, and economics align, a just transition is possible.
Well, the Bloomberg New Economy Forum takes place this week, bringing together global leaders to focus on rebuilding the economy in a post-COVID world. The all-virtual event can be watched online. Last year around this time, we were all trekking to China, but you can watch it online on the terminal and, of course, on the Bloomberg New Economy's social channels. I think we're expecting, of course, the Indian Prime Minister. We're expecting also a number of other people, the UN Secretary General, but also the Prime Minister of Singapore. It'll be really interesting to get their takes on the pandemic. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. President Trump is reportedly planning a new crackdown on China in his final weeks in the White House. According to Axios, he may announce new sanctions or restrictions against Chinese companies or officials. The move would be to prevent Joe Biden from changing course on China. Now, the UK is hinting Brexit talks could be extended again as key disagreements still remain. The UK's chief negotiator, David Frost, is heading back to Brussels for more talks. He's seen some progress progress in recent days, but says Britain won't be changing its position. The December the 31st deadline is now fast approaching. And SpaceX has launched 4 astronauts into orbit on its first regular NASA mission to the International Space Station. The Dragon capsule is set to arrive at about 4 a.m. Tuesday morning. That's London time, after blasting off from Cape Canaveral. It's a milestone in the development of commercial space flight. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Coming up, how do you forecast retail demand during the pandemic as we head into the busiest weeks of the year for the sector? Many consumers are facing a Christmas like no other. More on that next. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Lots going on, so let's get straight to the Bloomberg Business Flash with Leanne Gerrans. Hi, Leanne.
Hi, Francine. Italian payments provider Nexi is buying rival Nets for $9.2 billion. It's Nexi's second acquisition in as many months, expanding its reach across the continent. It adds to a wave of a consolidation in the industry. The two firms see the deal generating about 170 million euros of synergies a year. Now, PNC Financial has agreed to buy BBVA's U.S. operations for $11.6 billion. The deal would make it the nation's largest regional bank. It comes as smaller lenders are looking to scale up as giants JP Morgan and Bank of America move into new states and sectors. And the world's biggest oil company is set to return to the bond markets for the first time since last April. Saudi Aramco is looking to fund its $75 billion dividend commitment after weak oil prices left it without the funds to cover the payout. It hired banks including Goldman Sachs for that sale. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, how do you forecast retail demand during the pandemic as we head into the busiest weeks of the year for the sector? Many consumers are facing a Christmas like no other. So how can stores use the latest insights from the web to make sure that they bring the right product to the right person at the right time. Well, I'm delighted to be joined to talk about this by Mike Brackett. He's founder and chief executive of Centricity. Mike, first of all, is it much more difficult to predict how people will shop now? Or is it easier because we are in a pandemic, you know where people are mainly at home, and you know where people shop mainly online?
That's a great question, Francine. We've seen that it's drastically more difficult. If you look at what last year's buying trends were, so if you imagine you're a multinational retailer or CPG company, and you're looking at last year's trends to really decide what this year's shopping patterns are going to be, which is what you traditionally do, we've seen that, of course, all consumer patterns have changed, cooking habits have changed, and really entire new generations have entered the cooking market. So we're certainly seeing it being increasingly difficult to correctly forecast that on top of supply chain issues and out of stocks that we've already seen.
So, Mike, what do people want to buy? First of all, do we have, I mean, it seems that everyone's doing DIY to their house. Will that continue into the new year?
Yeah, absolutely. So to your point, we're seeing that throughout all retail sectors. I think that the majority of what we've seen has been in food, because during the lockdown, of course, that was considered essential. But to your point, you know, now that global retail is really open and those non-essential businesses have been able to open, of course, we're seeing DIY, we're seeing the Q4 food holidays come in, where now you have the complexity of a compressed supply chain, which we're certainly seeing with our European partners as well as people are pulling up their buying patterns for these Q4 key holidays, both in the U.S. and Europe, way sooner than they usually would have, as well as back to school supplies. You know, you have a lot of people who are now at home teaching their children who were not before, and we're certainly seeing those lockdowns go back into effect. So again, you compress this with the largest buying season of the year, with another wave of the pandemic and subsequent lockdowns happening, and it's created a really interesting and challenging outlook for retail and CPG companies.
Mike, first of all, how do you find the data? How do you collect the data? And again, you know, are our tastes changing because we cook more at home? And this is for the grocers.
Yeah, it's a great question, Francine. So what Centricity does is we take in about 2.5 billion points of raw anonymized internet traffic from all over the world. We layer on both human and artificial intelligence on top of that, geolocate all of that to within about a 1 kilometer accuracy anywhere in the world. And what we're really able to do is we're able to see what consumer trends are, to your point, in real time, as well as in the future. And so the data tools that have kind of been incumbent before us have been syndicated data companies like Nielsen, IRI, which again provide historical point of sale data, which is very problematic these days. So what we're really seeing trending, to your point, is besides the obvious stockpiling thing. So unfortunately, we are seeing signs of the normal paper towel, toilet paper sort of stuff, but also we're seeing completely different things that we never would have expected, such as different things in the spice category as people started baking more and cooking more. Not to pick on my own generation, but the millennial generation, particularly in dense urban areas who had perhaps never cooked before, have now been forced to out of necessity. And while it's not as drastic of an increase in demand for those things as we saw through the first wave of the pandemic, we're seeing that really sustain a lot more than we thought that we would as lockdowns have subsided, but also as the fear of subsequent lockdowns have increased. So to directly answer your question, we really do feel that consumer tastes have changed, and really more people are entering this cooking at home sort of market that perhaps weren't before. And now retailers and consumer good companies are trying to adjust during this holiday season.
So, Mike, if you're looking at canned goods, you need to make the decisions now of what people will want in summer 2021. If we have a vaccine, will people continue, you know, the people that started cooking at home, will they continue doing so? Or do we go back to restaurants if we can afford them?
I think that we're going to see both. I think that, you know, certainly any retailer is, you know, seeing that more profitability than they've seen in some instances in the history of their companies. So I think certainly they're hoping to retain a good portion of that market share. But of course, after a vaccine, we do expect that people will go back to normal. But what's really interesting is that even as lockdowns have eased up. Of course, there's no vaccine, but we've still seen a lot of that demand retain on the retail food side. So I think if you're a retail or consumer good company, this has been the best trial you could have ever asked for to get people into your business. And they're going to do everything that they can to retain that. But you're also going to have on the other side of that, restaurants doing everything they can to ease people back in. I think one of the more interesting logistical things that has happened out of this is companies like Instacart or even these large institutional multinational retailers have really been forced to invest in kind of last mile delivery services, whether it be through third parties such as Instacart or through first parties such as themselves. And so now the ease of accessibility to be able to shop from a grocery store, even if you're not able to or not wanting to go from home, is more accessible than it ever has been, just due to sheer accessibility of these companies needing to reach their customers. And that's something that will not go away. And so that pattern from brick and mortar to online has been greatly amplified. And we think that that market share will absolutely retain as well.
Mike, are people just much more healthy? And I don't know whether that was a trend that was already there that you could identify, or whether that's really accelerated in the pandemic.
Yeah, you know, I guess it depends. We certainly have seen, I mean, one could make the argument that cooking at home is holistically more healthy, but of course we've also seen huge increases in alcohol consumption and the subsequent demand for that. But I think that overall, you know, this has really spurred people to think differently about their diets and think differently about their health, and we've seen that reflect. So our hope is that coming out of this, a lot of those positive trends stay, and we're again seeing trends of that and signs of that on our platform as well.
Thank you so much, Mike Brackett, there, founder and chief executive of Centricity, on what we'll buy or not be buying for Christmas. Now let's stick around and talk about, of course, some of the consumer trends we've seen. Cosmetics giant L'Oréal sees a makeup revival after the pandemic. Well, the chief executive, Jean-Paul Agon, told us that even though e-commerce has gained traction during the crisis, the market will not completely move away from bricks and mortar stores.
I think that, as you've seen, we were already back to growth on the third quarter. The market is still negative, so we are doing better than the market, but the market should recover. You know, there is a very strong appetite everywhere in the world for beauty products. And in fact, as I explained several times, the crisis that we had this year is not really a demand crisis as we used to have in the past, in other crises, but it's more a supply crisis because consumers couldn't buy the products. So we are back, for example, in Europe, back to lockdown, but now e-commerce is getting traction. And I think that when, because there will be a when, the virus is gone, I think that we will be back to a very good consumption. The appetite for beauty is absolutely still there, more than ever.
Your chief digital officer recently talked about e-commerce. As you say, you see a lot of demand in there. And they were talking about the fact that it's your biggest market now. All of this clearly fueled by the pandemic. Will it ever be 100% and we see an ease up or a phase out of brick and mortar retail stores?
No, I don't think so. I think that it's a new option for consumers, and consumers are switching. Part of consumers are switching every year more from brick and mortar to e-commerce. Of course, it was accelerated this year. It was already going very fast before. You know, I remind you that last year, for example, our e-commerce sales were growing by 50%, which is already very fast. So this year, of course, it grew even faster because when the stores were closed, of course, there was an acceleration. And it represents now 25% of our sales. So it's going to keep growing, but consumers will always want to have the opportunity also to see products in stores. And so I'm a great believer in what Jack Ma described a few years ago already as the O+O, which means offline plus online, as two options and also a combination of options.
What are you currently seeing, given the fact that Europe is dealing with the second wave, France is in lockdown, the UK is in lockdown? How has that affected your business?
It doesn't help, of course. It doesn't help. I'm really sorry for for our partners, our salon, for example, professional salon partners, perfumeries, department stores. It's really difficult for them, so we help them as much as we can. During the first lockdown, we froze the payments of all our small customers, more than 100,000 salons and small perfumeries, and we accelerated payments to our suppliers. So we are doing the same. We try to help our ecosystem. And of course, it doesn't help consumption, but I hope it's not going to last too long. And consumers also, I think, are more now aware of other options. They go on e-commerce, they find solutions, but of course, it doesn't help. It should not last too long.
Well, that was the L'Oréal Chief Executive Jean-Paul Agon speaking on the makeup industry's revival. In the meantime, talk about revival. This is what the markets are doing. If you look at a lot of European stocks, they follow U.S. futures, looking at records. Now, the focus is firmly, of course, on the positive momentum on trade. I'm talking about what's happening in Asia. A lot of the Asian countries signed on this historic trade deal yesterday. There's also signs of opposition to a national American lockdown. That seems to be supportive of a lot of the stocks, and the dollar is falling. Now, again, if you look at some of the other things that we're watching, I would look at European cyclical stocks that seem to have pulled ahead of defensives, certainly in the year-to-date performance. Coming up, Belgium's Prime Minister says the country's intensive care units are pushed to the limit. Our interview with Alexandre De Croo is up next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, Belgium's Prime Minister says the country's intensive care units are pushed to the limit. In an interview with Maria Tadeo, Alexander De Croo told us he believes coronavirus restrictions will be in place for a long time. Well, they spoke at the European Business Summit in Brussels.
The numbers on one dimension are going in a good direction, which is the number of confirmed cases. We've seen over the last week numbers going down, which is a good thing. On the other side, we see that in our intensive care units, the pressure is still very high. We will be able to cope with the fact that we have many people in hospitals. We've always had a lot of hospital capacity and a very high quality healthcare system, but it is really being pushed to the limits. We are here showing again that while there is a very strong link between a strong and healthy and resilient economy and a healthcare system that is strong.
And, you know, I remember this at a press conference. You said we all in Belgium, but also almost Europe, we all need to act as one team. And so I do wonder, the restrictions that you've put in place, of course, they have a huge impact, not just on the economy, but also on people. You know, could you give us any insight as to whether these restrictions you do feel are going to be here for a while and people need to get used to this, or whether there's a timeline going forward now that we have that vaccine news that I'm sure you welcome like everyone else?
Well, it is a marathon. It's a long-term effort, and in Belgium, I've always said, look, it's a marathon. We are for the moment closer to the start of that marathon than we are to the finish. So I'm convinced that some kind of measure, some kind of restrictions will be applicable for a fairly long time. I've seen the
morning, ladies and gentlemen. Order place to buy Swiss franc at 0.91109. I'm placing an order to buy Swiss franc at 0.91109.
Quite a long time, yeah.
And you know, I want to pick up on that final point that you just gave, because it really does reflect everything that we've heard from almost leaders across Europe, the Commission to really get this message across that the vaccine is not a silver bullet, that we all need to be flexible and adapt. So I wonder, how do we do that on a daily basis to keep the economy afloat? I do wonder, do you have a plan in terms of what the next 6 months are going to look like for the Belgian economy?
Well, look, the way we managed the second wave is different than we did it in the first wave. In the first wave, we went for an almost full lockdown. We closed down all non-essential businesses. This time, it's different. And the non-essential retail is closed, but all the other businesses are open. People have adapted themselves in working from home as much as they can. We now have face masks. I mean, a lot of life is still going on. It's just we've been better at identifying at what is risky behavior and trying to minimize.
Long position opened at Swiss franc 0.91109.
European Business Summit in Brussels. Now, the focus on the markets is actually on some of the positive news out there. The fact that Joe Biden's advisors have said that they will not look at a lockdown. Again, so many questions about whether we need to put the economy against the health of people. But this is the way it goes, and certainly that's what the markets are looking at. The number of infected keep on rising, but there's hope that a vaccine will be here sooner than expected. We'll also look at some of the scarring for the economies around the world. Bloomberg surveillance continues in the next hour. Tom Keene joins me out of New York, and this is Bloomberg. another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. Balancing risks, President-elect Biden's team suggests a national lockdown is not on the agenda. Virus cases in the U.S. surpass 11 million, but global stocks continue to gain. Trump's last stand, the president comes close to admitting he lost, but walks back all the talk of a concession on Twitter. There are reports he plans fresh hardline moves against Beijing in the final weeks of his term. And best laid plans, Brexit talks with the EU enter another crucial week, but the UK Prime Minister is isolating after coming into contact with a lawmaker who tested positive for coronavirus. Well, good morning, everyone. This is Bloomberg Surveillance. I'm Francine Lacqua here in London, Tom Keene in New York. Of course, if you're watching from Asia, good afternoon to you. This is Monday morning, Tom, and there's a lot going on. First of all, we look at this historic trade agreement with a lot of the Asian countries that was signed yesterday. It may put extra pressure on the next president of the United States to rejoin TPP, but the focus is, of course, on the president, Trump, whether he'll concede and what this means for trade deals with China as well.
Yeah, I read about the trade deal. I mean, it's on the back of the burner for Americans because both candidates, both parties are really reticent to sign those deals. We can touch on that, but you're right. Front and center here in the nation is the step-by-step, the back and forth, the tweet-by-tweet with the president. But even fronter than that is the pandemic. Francine, it was the oddest of weekends.
Yeah, it was actually a really busy weekend, and here, of course, in the UK with news that Boris Johnson, who contracted the virus, remember, in March, who even went to ICU, now having to self-isolate after coming into contact with someone who's tested positive. So we'll have plenty more on that and the consequences for Brexit. But first, let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine, Tom. President-elect Joe Biden's top coronavirus advisors say a national lockdown isn't on the agenda. One of them, former Surgeon General Vivek Murthy, says the preferred approach to fighting it is, quote, a dial that we turn up and down, depending on severity. U.S. case records have hit records over the past 2 weeks. Boris Johnson's attempt to get his premiership back on track has stumbled before it even began. The British Prime Minister is being forced to self-isolate after meeting a lawmaker who tested positive for the coronavirus. Johnson had hoped to regain control of the national agenda following a chaotic turf war in Downing Street. In sports, Dustin Johnson made history while winning his first Masters tournament. The world's top-ranked golfer shot a record 20 under par to win by 5 shots. It was the largest margin of victory at the Masters in 23 years. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. What we've got going right now is equities higher. We can talk a lot about this. We'll do this through all of surveillance today. Futures up 31. Dow futures explode up 295. Buttressed right up against 29,705. The VIX shows at 23.52. You wonder as the VIX opens if we'll get a 22 handle on the VIX this morning. Dollar, little bit of weakness, but I'd really focus, Francine, is on Pacific Rim. It's not a series we look at often.
Placing a stop on profit for Swiss franc at 1.91.509. 8, 5, 9. Will move lower to 4, 9. Maybe it will go maybe higher. So as you can see, this is resistance level. So if it will get lower, I will be in a profit. If it will go higher, I will still hold stop at the level 0.91149.
He said, I concede nothing. Ron Klain, President-elect Biden's chief of staff, told NBC's Meet the Press that a concession from Trump was immaterial.
Donald Trump's Twitter feed doesn't make Joe Biden president or not president. The American people did that. What we really want to see this week, Chuck, is the General Services Administration issue that ascertainment so we can start to do the kinds of things you and I talked about a few minutes ago. Meet with these vaccine officials, kind of get the intelligence briefings for the president-elect, the vice president-elect.
Well, joining us now is Lindsay Newman, independent senior political analyst and former Chatham House senior research fellow of U.S. and the Americas. Lindsay, thank you so much for joining us. I mean, frankly, it's just bizarre. Like, it's difficult to know who's right, the whole thing just, it's like a bad plot out of a B-rated movie. How does this end, and what happens this week?
Well, as you said, it's to begin with, all eyes remain on Trump. Absolutely. Will he concede? When will he concede? And also how he will concede. I appreciate that Ron Klain, incoming chief of staff's statement on Meet the Press. And it's important really to separate out the question of who will be president on January 20th, 2021. Barring some unforeseen events, that will be Joe Biden. He is 306 electoral college votes to Trump's 232. But separate that question of who will be president next year with the question of how is the current president behaving during this important period. If it were any other country in the world, we would be concerned about the political system, the health of that political system, and its trajectory.
Lindsay, give me a sense of exactly what you think Joe Biden needs to do now. Is he getting the very important briefings that usually the president-elect has access in a transition period?
So Donald Trump continues, as you said, to use this language around a rigged election. He is not conceding. There was this moment where on Twitter where he said that Biden won because of the election being fraudulent. But now, as you said, he's backtracked. So where Biden stands is still pretty much shut out. He is taking important steps. He has named his transition team across various sectors. He's named Ron Klain to be his chief of staff. He's named this COVID advisory board. So he is putting his ducks in a row. He's calling foreign advisors and having that dialogue open, which he did not have during the campaign. He was very clear about not having a foreign dialogue during the campaign process. So Biden is doing everything he can at this stage to conduct a transition. But the transition is not happening because from the Trump side, it is not being received. The GSA has not authorized. Biden is not getting the daily intelligence briefings. And we're seeing that even Trump's former advisors like former Chief of Staff John Kelly, former National Security Advisor Bolton, are concerned. They're saying this is now rises to a national security issue. There's potential concerns about intelligence, but also around coronavirus. They're not able to get that information as they do their planning and as they get ready for January 20th, 2021.
Lindsay, the clock ticks forward, and I understand that this week is different than last week, and we're into a holiday season. I mean, November, we get Thanksgiving next week in America, and then we go into December with the third, fourth week with Christmas as well. Lindsay, what I find extraordinary here is where is the judiciary? In your study of this, is this an executive/legislative issue, or does the judiciary participate in this original history?
So what's important to point out here is Trump has thus far been using the court system, has been bringing these lawsuits, which by and large thus far have been tossed out. The key point here, and when we talked about last time I was on, was related to Bush v. Gore. We remain not in Bush v. Gore territory. And the point is, with Bush v. Gore, that related to a recount where the margin in Florida was 537 votes. So the court's decision in that case could have been decisive. It could have been a game changer. Everything we've seen thus far in terms of evidence, of which there is very little concrete evidence.
But Lindsay, I don't mean to interrupt, but I think this is important. Does the judiciary play a voice or part in the transition issue? Do they get involved? We don't know, do we?
So the process is very much ticking forward. Right now at the state level, the states are certifying these votes. And then there's the opportunity for Trump to bring objections, in which case the sort of judicial levels at the state levels could be brought in. It could take its way up to the Supreme Court, but nothing that we've seen so far suggests that a judicial decision would be decisive, would be a game changer in this instance. So we have, in December, the electoral slate will be selected on December 8th. On December 14th, the electoral voters will vote. We have this idea of the faithless elector. But really, this is, Biden has 306 electoral college votes and more than 5.6 million in the popular vote. So this is not a close election in that sense that the judiciary is going to be able to intervene and have a decisive decision one way or the other.
Position closed on Swissy at 0.91, 149.
Seen is there has been some sort of space being given by some Republicans, but by and large, most Republicans are staying quiet. And then there are those that are continuing to actively rally and support President Trump. The election itself was a mixed message, because what we saw was that down ballot, Republicans did very well. But with the question of Trump himself, many people decided to go for Biden and then go down ballot Republican. So the question is, where does the Republican Party go from here? What does this mean for so-called Trumpism? If Trump was not, there wasn't a mandate for Trump, but there was a mandate perhaps, or certainly a positive swing for the Republican Party. It's going to be very difficult for them to figure out what the next steps are with Trump no longer in that all-important office. Although I, for one, do not think he's going away. I fully expect him to continue to throw out these ideas around a media empire and to continue to throw out these ideas around running for re-election in 2024.
Thank you so much for joining us, Lindsay Newman, their independent senior political analyst and former Chatham House senior research fellow of the Americas program. Now, we'll have plenty more, of course, on the election. We'll also look at bonds across the world with Nicolas May. He's PIMCO portfolio manager and sovereign credit analyst. That's coming up shortly, and this is Bloomberg.
Surveillance. Good morning, everyone. On Monday, a complete week here in the United States. Thanksgiving 2 weeks away. Imagine Thanksgiving at Francine Lacroix's house. That's very exciting. She would kill it, I'm sure, in cooking
Chaos.
the November beast. Right now, Nicola Mai with us with PIMCO, portfolio manager. Real focus on Europe, but we're going to broaden out the discussion here on yield and what it does to global yield, and that is an Asian recovery. China doing better, and clearly identified, Nicola, by stronger Pacific Rim currencies and ADXY out to a recent record strength. What does it mean for an Asian strength to global yield?
Thank you, Tom. Yeah, I mean, there's no doubt that China has been outperforming. So we saw the IP data this week. We're seeing that China is doing better than others, partly because of an effective lockdown, and partly because actually China produces a lot of sanitary goods, PPE equipment, electronic goods, which have actually been benefiting from the crisis. Now, this outperformance is good for China. I think globally, China is not going to be able to lift the global economy out of the current slump. I think Europe is in lockdowns, which means a double-dip recession. The US is likely to introduce more restrictive measures state by state as we get into the winter. Obviously, the vaccine improves the outlook from the spring, but I think this is going to be a stop-and-go winter, and I think that yields are going to remain very much anchored in this environment.
And Nicola, we're going to begin our new economy forum with Mr. Gutierrez of OECD, and they're looking at a blended global slowdown. We've got lots of indicators showing dampened aggregate demand. PIMCO's nailed that. Is it worse now than you expected?
I would say that the COVID crisis has accentuated the reasons why there has been a shortfall of demand relative to supply. So what you see is an increase in caution, an increase in precautionary savings. What you're seeing is that an increase in unemployment. So I think all of that is probably cementing the view that interest rates are going to be anchored at a very, very low level. So I think we should expect zero yields in policy rate space for a very long time ahead.
Two young lads email in from somewhere in the vicinity of London, and they say, Tom, you're a dummy. He's with the UN. I said Mr. Gutierrez was OECD, and these two young lads just email in, and they say, he's so dumb. Of course, with the United Nations. Francine?
It's a Freudian slip, Gutierrez, it happens. Nicola, where do you see the most value amongst bonds right now? If you look at European bonds, the ECB is doing so much. Is there a danger that they actually, prematurely take away some of what they're doing because we'll see inflation quicker than expected if we get a vaccine by 2021?
I don't see inflation coming back anytime soon. I mean, over the medium term, it is possible that, the strong fiscal and monetary support and normalization of the economy leads to some inflationary pressures. But I think the shortfall of demand relative to supply is too big. So I think the ECB is going to be very accommodative for very long. We expect an additional 600 billion or so of asset purchases announced in December. And in that context, I feel that BTP spreads are pretty attractive, even at 120 over Bunds or so. There's not that many assets out there that give you that kind of return for what I see a limited amount of risk. I mean, I think the ECB is engaging in what you could call a loose yield curve control and spread curve control. So I think I see rates as anchored there.
But Nicola, what happens to the economy if we get a vaccine? How quickly can we get back to normal?
So we are updating our numbers as we speak, but I think the vaccine is obviously going to make the recovery better and steeper from the spring, but I think normalization will take time. I mean, first of all, there's questions about how quickly the vaccine is going to be implemented, distributed, what the take-up is going to be across the population, obviously. And I think the normalization will be there, but in our mind, we don't see activity going back to 2019 levels until 2022 or so in Europe. So we're talking about a very long time away. And in that environment, it's hard to see inflationary pressures building in any significant way, which is why I think bond yields are going to remain very low and anchored, and the BTP spreads are probably going to be a decent asset to invest in.
Okay, we'll take Italy as an example then. I mean, what does it do, translated out of your world, Nicola, over to equities? Equities just continue to rise. A story this Monday morning, his futures up, up, up. How does your fixed income space translate over to equity valuations?
So I would say if you look at equity valuations, but even generic credit spreads, they look fairly stretched. Now, when it comes to interest rates like hard duration or BTP rates, they're going to be directly anchored by the central bank actions. When it comes to equities and generic credit spreads, I think there's going to be obviously an impact of the fundamentals and of the economic growth outlook. And at the moment, when we look at these spreads or equity valuations, we don't see a lot of value. Obviously, the low interest rates are supporting higher valuation than if you didn't have them. But we think you have to be pretty selective and cautious when it comes to risks. So we focus on sectors and names that we believe in. Among these, U.S. mortgages, banks across the globe, but also in some sectors that are severely disrupted, like airlines, hospitality, and so on. There will be names that we like to invest in the bond space.
Nicola, thank you so much. Greatly appreciate it. With PIMCO getting us started this morning on yield, the 10-year yield, 0.88%. The New Economy Forum this year is different. It is virtual, and that has made it ever so more accessible. One of the panels is extraordinary. The Chinese Vice President, the UN Secretary General, and with them, the King of Jordan, a beyond timely discussion with King Abdullah on the Middle East, a Middle East that Mr. Trump would like to leave. This is Bloomberg. Good morning.
better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. PNC has agreed to an $11.6 billion deal that will make it the largest regional bank in the U.S. The lender is buying BBVA's American banking operations. The Spanish bank's U.S. business is focused on mobile banking, but its value took a hit from the coronavirus pandemic. Italian payments processor Nexi has agreed to buy private equity-owned rival Nets. The all-stock deal values the Danish-based company at $9.2 billion. It will extend Nexi's reach across Europe. The firm has operations that include Italy, the German-speaking countries, and the Nordics. And Walmart is retreating from its two-decade attempt to crack Japan's retail market. It's selling most of Japanese retailer Seiyu to KKR and Rakuten in a deal that values the company at $1.6 billion. The buyers will try to shore up Seiyu's digital operations. And that's your latest Bloomberg Business Flash. Tom, Francine.
Ritika, thanks so much. Greatly appreciated. Futures up 31. That's what you need to know. Equities with a worldwide lift out. Futures up 281. The VIX 23.50. We really don't have a pricing yet on the VIX. Too early in the morning. Well, I wonder, 22 print here, as I said earlier. Yields come in fractionally. Well, on oil, great stability. $41 West Texas, rounded up. $44 on Brent crude. I'm lying, 43.52. That's not a very big roundup. Gold up $6, $18.92 the ounce. Francine, what do you see?
Yeah, Tom, I'm seeing a very similar data check to yours. It's really all about Asia because of the trade deal that they signed yesterday. I'm looking a little bit of dollar weakness, but nothing huge again. And I think that the markets are trying to look through some of the sentiment because of infections, really trying to focus on positive news on trade. And also they like the fact that there were signs of opposition to a national American lockdown, the dollar falling a bit. Now, coming up next, we'll talk about a possible recession with the former Bank of England governor, Mervyn King. This is Bloomberg.
seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Governments unveiled over $12 trillion to stop the economic fallout due to COVID-19. And for a full recovery, trillions more will need to be spent. In March, the U.S. Senate passed a $2.2 trillion stimulus bill with nothing specifically for green interests. China has published an ambitious slate of energy-efficient infrastructure goals, but it has also rolled back regulations on coal plants. And around the globe, green measures account for less than 1% of the total coronavirus-related stimulus spending. In contrast, some 7% is specifically targeted at carbon-intensive companies and sectors like transport, industry, and oil and gas. So, what are the implications for the future? After the 2008 economic crisis, carbon dioxide emissions dropped 1.4% in 2009 before rising 5.1% the following year when the economy started to bounce back. The most efficient solutions for rebuilding the COVID-ravaged economy are those that also reduce carbon emissions. An Oxford economic policy study published in May of 230 central bankers and economists cited policies with major climate benefits, such as clean energy research and infrastructure, disaster preparedness, and zero-carbon transportation as the preferred public sector response. The study asserted that unless policymakers keep carbon emissions top of mind, the world risks leaping from the COVID frying pan into the climate fire.
Good morning, everyone. Bloomberg surveillance from New York, from London, the New Economy Forum this week. Right now, most important to get to one of our panelists on the panel of the day, which is on central banking. Mervyn King joins us, a former governor of the Bank of England. What you need to know, folks, is Mervyn King and Lawrence Summers, well, sometimes they may not agree on economics. But it is important to note that the former Secretary of Treasury says, shut up and read, Mervyn King. Summers with a rave review of Lord King's The End of Alchemy. Mervyn King, at the end of Alchemy, your magisterial book, you speak of our prisoner's dilemma. With all that's going on, what is our prisoner's dilemma for 2021?
Well, it's connected, I think, with COVID-19, but more importantly, with preventing the next pandemic. I am slightly worried that politicians are encouraging us to think that there is light at the end of the tunnel, we'll come through this and then we'll be back to normal. But we don't want to go back to where we were. We need to prepare for the next pandemic. And I think that means international cooperation, particularly in the field of international air travel. We desperately need to get to a point where we can be confident that if one country experiences the outbreak of a virus, then immediately they will seal their own borders to prevent it escaping to the rest of the world. If not, we will all end up clamping down on air travel very quickly.
Central bankers right now are constrained by this, that, and the other thing. But one of the constraints going back 14 years is the inability to retire debt, the inability to retire failed businesses, not only zombie companies, but some would say zombie capitalism. When do we finally clear our markets?
Well, I think the challenge over the next 3 years is going to be precisely that, which is to recognize that there are zombie companies and probably therefore zombie banks. And we need to recognize the true value of those assets, write them down, and recapitalize institutions that have a future. And I think that's going to be a big challenge for the next 3 years. If nothing else, what COVID-19 has done is to force us to face up to that in a way that we've failed to do for the last 14 years, as you said, Tom.
Lord King, good morning. Also from London. When you look at, the hopes on a Biden presidency, are we putting too much hope on going back to multilateralism, on going back to, countries working together to try and find a solution for the next pandemic?
Well, good morning, Francine. I think that's a big question. I think that the new Cold War between the US and China will not be affected very much by the change in US administration. It's a fact of the world that isn't going to alter. And how we cope with it, I think, is the big question. I have no doubt that the relationship between the European Union and the United States will be a much warmer one with a Biden administration, much more cooperation. But the question is, what will that cooperation be used for? No doubt there'll be warm noises about trying to deal with climate change, but what that amounts to remains to be seen. And I think that in terms of handling China and many of the other problems around the world, the big debt problems we face, I think it's an open question as to whether this will actually produce something positive or simply end up with just yet more attractive press briefings and statements by politicians that in the end add up to rather little.
Lord King, we keep on talking about the trade-off between saving lives or saving the economy. Why have Asian countries and China not talked about that? Because they seem to have handled the virus in a much stronger way than us.
Indeed, and I think it's an open question as to whether it makes sense to think in terms of a trade-off. One of the surprising features of the last few weeks has been that those countries that suffered most in the spring from COVID-19 seem also to be the countries that are suffering most now from the second wave. I don't think that was expected. I think the post-mortem will look very carefully at the willingness of countries in Southeast Asia to be very tough on quarantining with a very effective test and trace program. And that was the aspect which the Western countries were less well equipped and prepared for when this pandemic broke out. So the countries that on paper appeared to be the best prepared for a pandemic turned out not to be the best prepared, and largely because they couldn't manage quickly an effective test and trace program, and they didn't close down their borders fast enough to prevent cases from coming in. And so the epidemic reached a level at which the test and trace program was rather ineffective.
Governor King, we're going to come back and talk about Britain. There's a little bit of news flow out of the United Kingdom. But I do want to ask you about the idea that central bankers are hamstrung at the zero bound because the commercial bankers can't exist in a negative rate environment. Is the major constraint on the continent of Europe negative interest rates just simply don't work for commercial banking and society?
Well, negative interest rates can't work with a successful banking sector unless the banks can pass on negative rates to their retail customers. And once that happens, then I think you should expect to see a long line of customers seeking to take their cash out of the bank and keep it under the mattress, or at least in a new home safe. And I don't think that's a politically attractive prospect at all. I think much more seriously, however, the question is, why do we think that monetary policy is the answer to every sign of weakness in the economy? I can't think of any theoretical justification that would say that whatever the source of the weakness, a more expansionary monetary policy must be the answer. And I think, therefore, that we should, somebody coming from outside to look at where the world economy is today would say, look, you've had the most expansionary monetary policy the world has ever seen for 10 years. And yet growth is still very slow. It was slow before COVID-19 came along. So that would suggest that the problem isn't a lack of stimulation from monetary policy. We need to look elsewhere. It's other policy issues and policy tools. And in particular, I think the need to reallocate resources from one part of the economy to another. And that's not something monetary policy in general can do.
Mervyn King with us, of course. I can't say enough, folks, about is the end of alchemy. We'll continue here with Professor King. With our Bloomberg First Word News, here's Ritika Gupta.
Thanks, Tom. President Trump has pulled back from a tacit concession to Joe Biden. On Twitter yesterday, the president wrote, he won because the election was rigged. But later, the president tweeted, quote, he only won in the eyes of the fake news media. I concede nothing. And the Trump administration is rushing to install environmental regulations that could complicate Joe Biden's agenda. As soon as today, authorities could advance plans for selling drilling rights in the Arctic National Wildlife Refuge. The administration may also move to lock in existing limits on air pollution and make it tougher to impose new environmental safeguards. The UK is signalling it won't back down as Brexit talks with the European Union enter another crucial week. Officials from both sides say the coming days will be pivotal in trying to reach a trade deal. Two of the most senior officials from the Brexit campaign left Prime Minister Boris Johnson's inner circle last week. The UK's chief negotiator insists he will not be changing his position. And it's a milestone trip for Elon Musk's SpaceX. 4 astronauts are aboard one of the company's capsules on SpaceX's first manned mission to the International Space Station. It's scheduled to arrive there tonight, New York time. SpaceX and Boeing have won contracts from NASA to fly crews to the space station. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom Francine.
Ritika, thank you so much. Now joining us, of course, for the rest of the day, plenty of wonderful guests from across the world for Bloomberg's New Economy Forum. Now we have a great panel on the future of Wall Street with the Blackstone Chief Executive, Stephen Schwarzman, the IBM Executive Chair, Ginny Rometty, and McDonald's Chief Executive. I know they'll talk about Wall Street versus Main Street and how to rebuild a stronger, greener economy. That starts 8:30 a.m. in New York, 1:30 p.m. in London. You can watch it live on Bloomberg.com, the terminal, and on Bloomberg New Economy social channels on Twitter and Facebook. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This This is Bloomberg Surveillance, Tom and Francine from London and New York. Now, we were having a great conversation, as always, with Mervyn King, the former Bank of England governor, who's still with us. Lord King, you were saying that basically, even from a theoretical point of view, it shouldn't be monetary policy that keeps on taking the brunt of everything. But we've seen quite a lot of fiscal policy. We've seen quite a lot of furloughs coming through because of the pandemic. Do you think these weren't enough, or do they need to be in tandem with monetary policy? Or politicians just look at 2008 and say, actually, central banks will deal with it?
Well, I think it'd be a terrible mistake for governments just to leave it to central banks. I don't like using the word recession about where we are, because this is not a normal recession in the economy at all. This is a downturn resulting from government shutdowns of the economy, or individuals too frightened to go to. For very good health reasons.
I think we're just having a couple of technical difficulties. Oh, sorry, Lord King, we briefly lost you for a couple of minutes. It's, some of these technologies that we're using, but I think we can hear you again.
Good, I hope so. So I was saying that the main policy role at present is for government, not central banks. And the role for government is to support businesses. Because of the shutdowns of the economy, for very good health reasons, the market economy has been put into a state of temporary suspension. And so we can't judge which businesses will have a future and which not. And for that reason, governments need to support businesses at present to keep them afloat until we can relax the restrictions and perhaps with a vaccine start to get back to a more normal situation, when we can then let the market economy decide which businesses will thrive and prosper and which will fail. But this is not the moment to let businesses fail. And so I think the main policy initiative that's needed is government support for businesses.
But Governor, how do you look at debt creation? Do we split the debt afterwards? Should investors not worry about how we're accumulating this?
So I think in the major industrialized countries, we shouldn't worry too much about the additional debt that's being created. It's obviously not a desirable position, but we didn't ask to be in this COVID-19 situation. But there are two reasons why the major countries can get through this without too many concerns about debt. One is that before COVID-19, their budget deficits, excluding interest payments, were not that far from zero. They were in a reasonable shape. And the second is that governments can now borrow long-term at extremely low interest rates, typically in real terms, negative. And you put those two things together, and even if the ratio of national debt to national income were to jump significantly to well over 100%, unless governments decide to introduce new spending programs, then merely returning to where we were would enable the ratio of national debt to national income slowly but steadily to decline. And that's the policy path that we want to be on. So I think all this rather panicky stories about massive tax rises, spending cuts, more austerity in order to repay the debt created during COVID-19 is a mistake. Now, having said that, I think there are problems for many other countries in the world that weren't in the same fortunate position as the major countries. And I think businesses have taken on a lot more debt. So, as I said to Tom earlier, I think the story of the next few years is going to be a story of debt restructurings.
Lord King, I've got one more question that I just think is so important. I don't know when you read Keynes' 1936. Maybe it was Cambridge. Maybe Bernanke threw it at you when you shared an office at MIT. But in Keynes of 1936, we talk about nominal rigidities. And that can be wage stickiness. One of the great assumptions of this slowdown is that wages will somehow be sticky. Are we in for it? Are we going to be shocked by a lack of real wage growth or even a decline in nominal wages?
So I'm not a great fan of wage stickiness as an explanation of what's going on.
We knew that,
in the world. Yeah. So I think that where there is pressure to maintain employment by asking people to accept lower wages. That very often happens. And I think that, therefore, you know, it doesn't happen quickly, but I think in particular sectors of businesses, the need to adjust can bring about changes in nominal wages. I'm much more concerned about the failure to reallocate resources between businesses, between industries, between companies, and between countries in order to get us back to a more prosperous world economy.
Mervyn King, thank you so much. Greatly appreciated. The former Bank of England governor this morning. Francine, I think it's really, really important there, the idea of these underlying theories that we will see in the New Economy Forum. And again, that panel today, Janet Yellen, Lord King, and also Raghuram Rajan, formerly with the Indian Central Bank. This is Bloomberg. Good morning.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. Tom and Francine from London and New York. The focus firmly on how leaders around the world are, of course, leading and dealing with the coronavirus. Belgium's prime minister says the country's intensive care units are pushed to the limit. In an interview with our Maria Tadeo, Alexander De Croo also told us he believes coronavirus restrictions will be in place for a long time. They spoke at the European Business Summit in Brussels.
The numbers on one dimension are going in a good direction, which is the number of confirmed cases. We've seen over the last week numbers going down, which is a good thing. On the other side, we see that in our intensive care units, the pressure is still very high. We will be able to cope with the fact that we have many people in hospitals. We've always had a lot of hospital capacity and a very high quality healthcare system, but it is really being pushed to the limits. We are here showing again that, well, there is a very strong link between a strong and healthy and resilient economy and a healthcare system that is strong.
And, you know, I remember this at a press conference. You said we all in Belgium, but also almost Europe, we all need to act as one team. And so I do wonder, the restrictions that you've put in place, of course, they have a huge impact, not just on the economy, but also on people. You know, could you give us any insight as to whether these restrictions you do feel are going to be here for a while and people need to get used to this, or whether there's a timeline going forward now that we have that vaccine news that I'm sure you welcome like everyone else?
Well, it is a marathon. It's a long-term effort, and in Belgium, I've always said, look, it's a marathon. We are for the moment closer to the start of that marathon than we are to the finish. So I'm convinced that some kind of measure, some kind of restrictions will be applicable for a fairly long time. I've seen the positive news on vaccines. That's great. But they're not there yet. We're still looking for the outcome of the medical trials. So vaccines and fast testing and self-testing will be a part of what I would call a containment strategy. And I expect that containment strategy to be part of our lives for quite a long time, yeah.
And you know, I want to pick up on that final point that you just gave, because it really does reflect everything that we've heard from almost leaders across Europe, the Commission too, to really get this message across that the vaccine is not a silver bullet, that we all need to be flexible and adapt. So I wonder, how do we do that on a daily basis to keep the economy afloat? I do wonder, do you have a plan in terms of what the next 6 months are going to look like for the Belgian economy?
Well, look, the way we managed the second wave is different than we did it in the first wave. In the first wave, we went for an almost full lockdown. We closed down all non-essential businesses. This time, it's different. And the non-essential retail is closed, but all the other businesses are open. People have adapted themselves in working from home as much as they can. We now have face masks. I mean, a lot of life is still going on. It's just we've been better at identifying at what is risky behavior and trying to minimize the things of which we by now know that it has an impact.
You hear me talk about vectors in the pandemic. Trust me, the Belgium vector is worser than the other major countries of Europe. The Prime Minister of Belgium. Coming up in our next hour on the markets, on futures up 27, Russell Kostrich, BlackRock. This is Bloomberg. Stay with us.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart
when we should.
So how many times a day do people ask you when your vaccine is going to be available?
Yes, well, that's definitely a very regular question, whether it's from employees, customers, media, or my mother.
The outlook for the economy is extraordinarily uncertain and will depend in large part on the success of efforts to keep the virus in check.
They are torturing themselves to explain that they're there, ready, willing, and able.
The Fed has basically done all it can do, with the exception of extreme emergency measures.
This morning, there is an acknowledgement the pandemic, it continues. The Prime Minister self-isolates. The French and Germans, they want lockdowns and restrictions. Michigan, in partial lockdown, says keep Thanksgiving under 40 people. Markets, they acknowledge China and Pacific Rim growth prospects. Futures up 29. And, well, the president, he continues his gambit, saying, I concede nothing. Mr. Bolton says Trump harms the country. And the chairman of the Joint Chiefs of Staff says, we do not take an oath to a king or queen, a tyrant, or a dictator. Extraordinary comments from General Milley. Good morning, everyone. Bloomberg Surveillance. I'm Tom Keene in New York. Francine Lacroix in London, pushed aside by now by a video tweet by the technologist, the Prime Minister of the United Kingdom. Francine, you heard it, I didn't. What did Prime Minister Johnson say?
Well, first of all, he had his usual disheveled look. It's from number 10, where he's self-isolating, and he's basically explaining that despite, as he says, bursting with antibodies, he needs to self-isolate because we have to keep people safe. Now, again, this is a prime minister, Tom, that had a pretty tough week last week because some of his key allies left after an in-house fight with Dominic Cummings, actually just packing his bags really rather unusually on Friday. And so this was also a moment to reset. And yesterday we found out news that the Prime Minister had to self-isolate, and I think he's taking this opportunity to be quite jovial, to be really Boris at his best, to make sure that people know that he's still working and still in high spirits. The other thing, Tom, that we need to keep an eye on is, of course, the headlines that are quite stunning from the Bundesbank, the German central bank, saying that the economic hit from the virus curves is less severe than in the second quarter, but that the German economy could stagnate or even sink in the fourth quarter.
Yeah, very interesting. There's a lot more going on here today. Stephen Englander, the acclaimed FX strategist, looking for the Fed possibly to show action before the December 16th meeting. In New York City with our First Word News, here's Radhika Gupta.
Morning, Tom. Francine. President Trump could potentially tie the hands of Joe Biden when it comes to China. Bloomberg has learned the president plans several new hardline moves against Beijing in the remaining weeks of his term. The National Security Council says future presidents will find it politically suicidal to reverse what it calls President Trump's historic actions. President-elect Joe Biden's top coronavirus advisors say a national lockdown isn't on the agenda. One of them, former Surgeon General Vivek Murthy, says the preferred approach to fighting it is, quote, a dial that we turn up and down, depending on severity. U.S. case records have hit records over the past 2 weeks. Boris Johnson's attempt to get his premiership back on track has stumbled before it even began. The British Prime Minister is being forced to self-isolate after meeting a lawmaker who tested positive for the coronavirus. Johnson had hoped to regain control of the national agenda following a chaotic turf war in Downing Street. And in sports, Dustin Johnson made history whilst winning his first Masters tournament. The world's top-ranked golfer shot a record 20 under par to win by 5 shots. It was the largest margin of victory at the Masters in 23 years. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Radhika Gupta. This is Bloomberg. Tom, Francine.
Ritika, thanks so much. On the data front, equities, they lift, and they lift up near record highs. The Dow, 29,690, 29,690, up 280 points. SPX up 30 points. No real pricing on the VIX yet, 23.50. It'll be interesting to see a 22 handle there if this trend continues. Dollar fractionally weaker. Bonds are weaker by a basis point. I would note Pacific Rim currencies continue to elevate. Francine?
Yeah, Tom, European stocks are following some of these Asian shares and U.S. futures higher, buoyed by positive sentiment on trade in Asia, as you say, which is why it's giving a little bit of a lift to some of the currencies. But they're also trading on signs of opposition to a national American lockdown. The dollar is falling. And then if you look at some of the things that we should also be watching out for is, of course, this regional free trade agreement in Asia. It's the world's largest. It's encompassing nearly a third of the globe's population and gross domestic product. Oil pushing higher, treasuries edging up, Tom.
Very good. What to do? And that is, of course, the setup here as we move into the holiday season. November 15th, usually marking that moment where year forward views begin to be written, no doubt at BlackRock as well. Russell Kosterich is Global Allocation Fund Portfolio Manager for BlackRock. We're thrilled he could start our Monday strong. Russ, what is your theme for 2021? What is your area of study to try to figure out what to do in this cacophony of news?
Well, good morning, Tom. You know, for next year, I think there are a couple themes. The economic one is obviously the pace at which the global economy can heal. We see normalization, obviously very dependent upon the vaccine. I think for financial markets, one of the key themes is to reconcile the volatility of the past couple of weeks when it comes to not just does the market go up, but what parts of the market are going up. If you look at the last few weeks, you've seen unprecedented moves in and out of banks, in and out of cyclicals, in and out of tech. And to a large part, not only the direction of the market, but the parts of the market that are going to lead, that's going to be a function of the type of economy we're going to have in 2021.
How do you allocate for that if there's not Tina yet in the cyclicals? If there is no alternative, and maybe that's the area of Amazon and Apple and the rest of them. Yeah. But what do you do to frame forward an allocation on cyclicals where they've already had a nice move?
Yeah, no, I think this is the big question. So our short answer would be focus on quality. And I think this is important because a lot of investors over the last few years have come to conflate value and cyclicals. We are actually increasing our allocation to cyclicals, but we're emphasizing quality. What do I mean by that? Profitability relative to peers, earnings consistency. So even in more cyclical parts of the economy, rails, specialty chemicals, semiconductors, we're looking for that theme of quality. And if we can find it, then we're actually comfortable taking more cyclical exposure because we do think we will see further improvement in the global economy in 2021.
But Russ, are we going to go back to what we had pre-pandemic, or how will our economies change? How do you find the thing that you can invest in given the uncertainty?
So, Francine, I think the short answer is no. We do believe we're going to see normalization, but I think as you correctly point out, normal doesn't look like January of 2020. The world is different. And we've already seen that. There have been so many trends that we all were aware of before this began, whether it was cloud computing, streaming, online, internet commerce, all of those have accelerated. So, for example, whatever percentage people had of wallet share in internet commerce in late 2019, with or without a vaccine, that percentage is higher in 2021. We see more reliance on streaming, a higher wallet share for gaming. These are trends we don't expect to reverse. And on the flip side, the pressure we've seen, for example, on brick and mortar retail, that's likely to be relentless, along with some new pressure, for example, in commercial real estate.
Russ, what do you do with the zombie companies? How difficult is it to see the extent of which these will be with us in 18 months?
Yeah, I think the short answer is you either avoid them entirely, or if you want to think about a trade, there are companies, there are periods when you may want to rent, not own, because we did see last week just phenomenal moves. I mean, these are moves we've not seen in more than a decade. One quick statistic, after the election, regional banks had their worst one-day performance relative to the market ever. And then a few days later, last Monday, when we had the vaccine news, regional banks had their best one-day performance relative to the market ever. You know, we haven't seen this type of whipsaw in factors and sectors in probably at least 10 years. So if you're going to look for these short-term moves, you've got to be very careful and very nimble because they're violent and they don't last that long.
What's the allocation look like? I mean, I'm at the zero bound. I don't know what the Sharpe ratio is because I don't know what the benchmark money rate is within that calculation. How does Russ Consters figure out how to balance equities with bonds?
So, Tom, we're currently overweight equities. It's not a huge overweight, but we are modestly overweight risk because we do think the market can grind higher from here. We're overweight high-quality income because, to your point about at the zero bound, our view is we're likely to beat that zero bound for a prolonged period of time. So getting the tailwind from income in the portfolio is critical. Now, the tough part is the hedge. You know, we've spoken about this in the past. It's not that bond-stock correlations are flipping, but you're not getting the same convexity, the same bang for the buck in the duration part of your portfolio that you received a couple of years back. What does that mean? A couple things, probably a bit more cash to create some ballast. Also means, again, in the equity portion, thinking about quality, lower volatility is a way to sneak some of that hedge into the equity book.
Well, I mean, okay, fine. I mean, I look at the hedge here, but I am at the zero bound with horrific nominal yields. How do you play that? Do you own full faith and credit here?
You own full faith and credit because it still gives you ballast in the portfolio, but at the margin you own a bit less. So, you know, what are you adding to the portfolio? One asset class that's growing, Chinese government bonds. You know, this is an asset class, doesn't provide the same degree of hedge, but it gives you a much richer real yield than you get in the U.S. or Europe.
Does quality equity give me that same ballast?
Well, partly, yes, I think is the key answer. So, you know, again, we're used to having that 60-40 portfolio. All of your ballast came from that 40%
exactly
government bonds. That's going to be tougher to replicate.
Oh, this is sacrilege. I mean, Kostridge here. You know, this is
where we're at.
Against Rome. You're killing me. This is where we're at.
So it doesn't mean it doesn't work, but it's not going to give you the same degree of diversification. What do you have to do? There's no silver bullet. It's not as if there is a currency or a bond or a derivative to point to. You've got to look for multiple things, using FX as a hedge and also thinking about that quality in the equity book. That's the biggest thing. We've seen that the last 3-4 months that dampens that volatility when the wheels come off.
I've got to stop harassing Mr. Kostridge. He won't return with us. He's going to continue. He's going to continue with us this morning on ballast, among other things, as well. There is a new economy forum. This is my most important panel. Janet Yellen, rumored to be a Secretary of Treasury. Mervyn King, rumored to have a wonderful book, The End of Alchemy. And my book of the year last year, and again a book of the summer, Raghu Rajan, the former Reserve Bank of India governor and at this Booth School, Chicago. Look at that lineup. This is like, Francine, it's like a 3-hour panel, right? I'm kidding. New Economy Forum. This is Bloomberg. Stay with us.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is Bloomberg Surveillance. Tom and Francine from London and New York. We're back with Russ Kostridge to talk about the markets and some of the opportunities or not out there. He's BlackRock Global Allocation Fund Portfolio Manager. Russ, I know Tom was giving you a hard time, but what do you do with pound? Is this maybe the one unloved that could come, back with a vengeance post-Brexit?
It's a tough call. I mean, Francine, as well as I, it's really a hostage to a couple of things, Brexit, but also the fact that the UK economy has had a tougher time than other developed countries. But, in general, what I'd say is we have less risk budget right now in currencies than we did a year ago. We're relatively flat on the dollar. We've got some small overweights in some of the developed G10 currencies. But right now, I don't know if we're expecting a huge move in the dollar. And the thought was that if you had that blue sweep, you're going to see a good deal of dollar weakness on the back of a very large debt finance stimulus plan. That obviously does not look like the base case any longer. So, there are people that have a far more informed view than I do, but my base case is the dollar is more range bound going forward.
What does that mean for renminbi?
Probably, continued strengthening at the sort of gradual pace that we've seen. As I said, we do like Chinese assets, both on the fixed income side and also on the equity side. So, this is a market that's very interesting. We spoke a few moments ago about diversification and getting more diversification in your equity portfolio. One of the things that's interesting about China, not just from the perspective of the currency, but also the equities, because they're increasingly on their own cycle, we're finding that their assets, whether talking about fixed income or equities, are actually proving more diversified in a portfolio.
I look, Russ, at the diversification, and maybe it's too much diversification. How much is too much right now? I mean, and particularly in equities, are you overweighting the ones you love?
We always try to overweight the ones we love, and we try to focus on our high conviction names. But we actually, to your point, Tom, we have a number of positions on. Not all of them are either in pure secular growth or certainly not in deep value. A lot of our positioning is in the middle. So it's not focused on huge sector bets. Yes, we're overweight communications, healthcare, consumer discretionary, but more to the point, we're focusing on that theme of quality. And again, we're finding quality in unexpected places. To give you one example, specialty chemicals. This is an area where we're finding earnings consistency, good profitability. It's tied to the broader economy, to the cyclical, but they're longer term contracts. So it's a bit of a different cycle than just owning, let's say, home builders that are very tied to the short cycle.
Let me get specific about quality. Is quality of free cash flow? Is quality the stream of revenues, the partial differential of unit or price? What's the actual metrics, the nitty gritty that you're using to define quality?
So let me give you three metrics that I think right now are probably the most important, one of which is profitability. You look at return on invested capital for one. A second, pricing power. I spoke a moment ago about specialty chemicals. Which are the companies in a low inflation environment that can maintain pricing? The most important is actually consistency. If we look at what's working now, it's not necessarily the most profitable companies. It's profitable companies that can do it quarter after quarter. And that holds whether you're looking at cash flow, earnings, dividends. The biggest characteristic that the market is awarding today is consistency.
Russ, if you're not invested in the market, when's a good time to come in?
Francine, that's an awful tough thing to do. I mean, we're in a low rate environment. You're not getting paid to sit in cash. It doesn't mean you're not going to experience volatility, but I think in this world, to just sit out and